Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
Hey guys, welcome. Happy Monday. Wow, what a day. May, how are you doing?
Monday.
Sparky, we can't see you. Oh, there you are.
Okay. I got
Sparky,
like inch over.
I'm just Tony Denaro. I'm a dumb retail trader. We got May, our bond expert, and Sparky works. You manage a bond portfolio not related to movie companies, right?
Yeah, I'm not a high yield guy. I'm an investment grade portfolio.
So this is a non-shill live stream. And guys, I'm just gonna tell you this. Everyone I've been talking to today who's way smarter than me is equally taking their time and carefully reading through this, trying to understand it. This is a complex press release and 8K and prospectus, everything that went out today. I know that there are already people making videos saying crazy things like, well, maybe they're crazy, maybe they're true. We'll find out. When we know for sure, we'll let you know. But if someone that has no training, education, certifications in the industry is already telling you that AMC's setting up a shell company to move all the assets and then bankrupt the company so the assets can be protected, I want to tell you, how the hell did you already figure that out when none of us figured that out? Maybe you're just way smarter than me, but I know that May and Sparky, besides that very baseline comment that I just made, you have some thoughts about what the lenders would say or think about that type of thinking. May, you go first.
May, I'll let you go first, and then
ladies first.
Okay, well, my first reaction was to just laugh. Actually, sorry if this is your video and that's what you wrote. I get it. I appreciate the creativity and the concern. It's a 0% probability that the bondholders would.
There's a lot of creative minds out there, May.
I love that you went there. I can see it. I can appreciate your creativity, but that's a 0 probability in my head for various reasons. Sparky, go for it.
Yeah, I mean,
Sparky, what are some of the reasons that the lenders would never allow AMC to set up a shell company to bankrupt it and bankrupt the company and protect all the assets?
Well, they don't have a very good reason other than that's the source of their cash flows that pay them back. So besides that, I think they would just say, yeah, go ahead. Yeah, I scratched my head on that, and my guess is there might be technically an accounting / tax reason, not that they're taxable, but hopefully at some point they will be that they're doing this, but it's certainly not a security reason that they're removing them from the envelope or the reach of bondholders in a bankruptcy. That they would never let them do that. They wouldn't let Apple do that. If Apple had assets, Apple AAA bondholders, they wouldn't let them remove assets from the capital.
Now, I just want to say, we're going to dig through that rabbit hole too, but our first reaction to that is, sounds a little bit out there as a theory. Not saying it's impossible just yet, and we'll all dig into it, but I just wanted to talk about that first. And what we're talking about here, if you read through the filings, there is a new company created called MovieCo LLC, and AMC moved some of its assets and IP and leases, not all of them from what I quickly read through, but some of them into that new LLC, and that new LLC issued some of the debt. Is that how you guys read it?
Yeah, and it might be. I don't know that this is the case, but remember, who do they buy? Odeon, and Odeon's got a senior bond out there. It very well may come out that even though it's all under the same umbrella, the Odeon bonds are actually higher rated than the other ones, and
They
so
are.
they might be primarily secured anyway by the theaters that were the leases that were part of that buy.
Yeah. It was 175 theaters leases got moved to MovieCo, and AMC has like 900 theaters. So
yeah, well, that's what I'm saying though. But when they bought the Odeon, it wouldn't surprise me that that footprint is because those bonds, I believe, they don't have the only claim, but they may have a senior claim to that structure, and so it doesn't keep the cash flows from going to AMC parent. But in a bankruptcy, my guess is that might be collateral that stays with Odeon.
I would say just, before you listen to people pushing that narrative, first of all, are they qualified to have that narrative? Second of all, how have they already fully digested everything in this when the whole deal isn't even done yet and not all of the details are really even out there? Is that a fair statement?
Yeah, they literally are coming out almost as we're talking. There was nothing out until maybe an hour ago.
I want to actually add to what Sparky's comments, because like if you get away from what is probably not the thing that they're trying to do, and you start brainstorming what would they do with that entity, if as we kind of believe in this group, that's not the last shoe to drop on this particular announcement ahead of earnings. Then it becomes really interesting. Do they have a buyer that they're going to go ahead and spin that out such that it makes sense to go ahead and do the corporate structure, which is even better? Actually, it's actually the exact opposite of the bear story. Is there something else that they wanted in that entity? So they're going ahead and creating the separation preemptively. Like
that might be what it is. Even if they don't have a buyer today, what they may be doing is making sure it's separated out. So let's say they have to sell it a year or two from now, which obviously could have happened during COVID. They have separate everything. The debt goes with it. The assets go with it.
It's cleaner.
I think this comes down to this great divide in the retail community. You got your glass half full people, your people who look for the positive and logical reasons why things are happening, and then you have your people who think everything is a conspiracy, everyone's working against you, and this must be some trick that they're pulling on investors. And so people are going to be divided in how they view it. But as May and Sparky were saying, it's almost impossible that the lenders would allow that sort of deal to go through because it would be harmful to them, and they're not dumb people.
The simplest way, I think, to recap that, and we'll move on to the next thing, is if for some reason AMC 2 years from now wanted to sell Odeon and those seniors went with it and the debt went away, AMC would get cash, which would benefit the current bondholders. So that's why they would allow it. They aren't going to let them just ship assets off.
I'm with you, Sparky, on this.
All right, I'm going to put a screen up here. This is the press release, the very first notice that we got. Do you guys have any thoughts on why they dropped this? People are asking in the comments also, why did they drop this press release in the middle of the day?
Why did they do it in the middle of the day versus the beginning?
Why didn't they wait? Why didn't they do it in pre-market or after hours? Why do we have to endure a 1 hour suspension of trading? And this seemed kind of odd on the timing.
I don't necessarily see it as odd on the timing. I'd have to really
I mean, do you see typically, May? Yeah, you look at a lot more companies than I do, hundreds more than I do. Do you see these type of impactful things happening often in the middle of the day?
You see bond issue announcements in the middle of the day, and I don't, be honest with you, I don't know if it suspends trading or not, but this is obviously material to the company.
Yeah.
That's probably why they shut it down for an hour or whatever it is.
That is why they shut it down. I'm just asking why AMC felt the need to drop it in the middle of the day.
Let's say the debt holders got back to them at noon. Clearly, this isn't just kind of material. It's like crazy material.
Yes.
If they felt like at least one person in the group couldn't keep their mouth shut,
right.
and they'd be better off going ahead and releasing it. And an SEC issue. So that might be the other reason. But I don't know that you necessarily must see or can't see or what have you. But if you think that I do think that if you think there's a high probability that someone can't keep their mouth shut, then you go ahead and announce.
Well, and there's probably a pretty big syndicate involved in whatever the whole thing. This is exactly what you're talking about. And one thing, I mentioned to Tony in a comment earlier is that I don't know that they'll do this, but it wouldn't surprise me once they get this all finalized that they pre-announce earnings. Not wait till the date.
That's such a good. Yeah, I hadn't thought about that, but I totally agree.
But I mean, if they get this all done, it lets them talk about a lot of other things. Then that probably go with this. That would languish basically for 2 weeks until. And I think they did that once before. I think they did I think they pre-released earnings like in 22 when they did that first roll of taking out the 10 and 5/8 and they issued the 7 1/2 of 29 or something. I think they announced that and pre-announced their earnings.
It's so bad for the shorts if they, but we'll see because there's still road to go and the road to recovery is still there. But we did get farther down the road than I would have expected.
It's bad for the shorts, but at the same time, I think you're going to talk about this when we get into it. There probably is at least some dilution.
Yeah, we are going to talk about that. And I just want to say before we get into all of that, thank freaking God we got this debt restructuring behind us because this was the major like stumbling point for me to fully get behind this play this year until we could get this out of the way. Now, May, at the beginning of the year, I had said that I thought it would happen in the first half of this year, and you said it would happen at the second half of this year. Technically, May, you were correct. And
I said 20. I said there was no hurry 25. So May, you are winner chicken dinner because
thank you guys for
I thought they'd get it done, but they weren't in as big a hurry. But going back to what this whole thing's about, and May will back this up too from her, much more probably underwriting experience than me. The company's been talking to their lenders for months, if not longer. They're constantly talking to them, and it comes down to these deals come when there's appetite, so if they have a couple of their big guys, this deal all swings on the top, probably 60% of the holders of this debt. If they get the loan holder and a bond syndicate that represents 50 or 60% of the bond things, and they say, hey, what if we do something like this for extension? That's how this deal gets going. They don't need to get all of it done. They need to get 70 or 80% of it priced, and the rest of it can hang out kind of what you have now, where you have 40 or 50 million straggler bonds that didn't get tendered or called or something. Well, if the bulk is done, who cares if they have 100 million left in 26? That's not something they're worried about.
I want to put up the debt spreadsheet. I want to put up the debt spreadsheet that I've been preparing, and I shared with you guys earlier this afternoon that I'm trying to work through. Taking what is in this press release and mapping it against the existing debt and what it's going to look like on the next balance sheet. But can we just read the bullet points here together and maybe talk about whatever jumps off the page to you guys being much more experienced even than me?
I have questions for sure still.
I was going to say, Tony, I want you to explain it to me for sure.
I think this is good for people to see. This is good for people to see. Like, no one on your screen right now is an idiot, and I've been looking at this all day, and we're still like, I didn't even know if today's the right day to go live because I want to make sure I can tell you as accurately, guys, as possible exactly what's going to happen. But I don't know that I'm all the way there yet. This is a working session with you guys watching on. But when I saw people already putting out negative videos and negative tweets, I knew that we had to come live and at least talk about it because there's going to be a lot of dipshits saying stuff that is not correct. And we need to get at least ahead of that with some educated people in the industry. That would be those two down there.
I will say this.
Letting you guys know that we're all still trying to figure it out. And the deal's not done. Is that a fair statement?
Yeah, no, they're still.
Yeah, they're marketing this, so.
Yeah.
All right, so let's talk about why the deal's not done and what the framework is here in these bullets. 1.2 billion of new secured term loans, and I know I'm going to read this, and it's going to sound droll to the people watching. we'll put the spreadsheet up where you can compare A to B, and we'll talk about
Well,
these bullet points.
Let me attack that when you can, because that I think is fairly simple. A term loan is not probably nearly widely held as a bond issue. Like, May owns, she may own 10 or 25 or 100 of, different bonds at different CUSIPs. The loan's a little different animal that's not generally owned by retail. So for them to get it and restructure at least the bulk of that, they probably don't have to talk to a huge number of lenders to do it. And it's not something that trades a lot. It probably has very specific covenants. There's a lot of room in covenants for them to redo it. It may add to that if you want, but I think that was probably the more important piece for them to get.
Right. That was the right now they have a 1.9 billion term loan due 2029, right?
Yeah.
And what we got here on this first bullet is 1.2 billion of a new loan issued in consideration for an open market purchase of senior secured term loans. May, can you explain to the folks in layman's terms what that means when they're saying in consideration for open market purchase of those loans?
So they're just rolling the debt out from 26 to 29. But I think your spreadsheet is going to be the most relevant thing for this, because it looks like they're actually taking a little extra out. If I mapped it out correctly on your spreadsheet.
Well,
I guess what I want to say is these aren't bonds that are out there trading. This is term. This is a term loan, guys. So it sounds a little confusing when they say open market purchase, because it sounds like they're going out and buying bonds, right? To a layman.
And the other thing I was going to add to what May say is the bulk of what they're not all of a sudden wheeling this out and I'm going to start talking to bondholders. They've already been talking and negotiating this probably for a while. And May, one thing I mentioned to Tony, if they could do this because they did it the last time they did a major restructure, if they can avoid selling more stock, at least for a cash range part, but let's say they put 100 or 200 million in cash range in one of these things, that saves a lot of bullets for, the bondholders in general might take that because it saves capacity for them to sell shares and raise cash as needed later. So it wouldn't surprise me. Like you said, your math's off 100 or 200. Well, if they think they're going to burn 100 or 200 million this quarter,
it might work out.
And they could take that out in proceeds from this bond right now. I think they do that without thinking. I think they do that instantly.
So we've got 1.2 billion in term loan that is going to mirror over to the 1.9 that's currently in existence.
Mm-hmm.
That takes that debt, and I'm glossing over high level. There are some more layers to this, but basically takes the bulk of that 2026 debt and pushes it out 3 years, right? Pushes it out to 2029 with the potential to extend another 800 million, which would cover the full 1.9 billion. So between the 1.2 billion and the 800 million potential, they could cover that full term loan that's due 2026 and push all of that to 2029. Is that how you guys read that?
I'll tell you from doing syndicates, it really is going to come down to, like I said, I think the bulk of this is already wrapped up, but when they go out and actually market this and release it to institutions, it's going to come down to where their interest is. If they have 500 million of interest for 30s, that might grow and the regular 29 term might shrink. It's all where the interest is going to end up when the orders are done being taken. So that's why this is a work in progress, even for them.
All right.
The key thing that Sparky said that I think is so important is that probably they have a really strong view that this is already absorbed.
Yeah.
So it's not like this is like, oh, we just think we might. No, this is mostly probably the stuff that's additional that hasn't been absorbed yet. But
But this they have what do they call them? Don't they call them? There's something of interest. What do they call that? Indications of interest. It's not an order, but my guess is they have indications of interest.
Yeah.
From the largest holders enough that they, like I said, whether it's 60% or 80%, that this under these terms, we'll take some combination of 29 and 30, however it's priced, and then go ahead and do a deal and try to get the rest of it. But the bulk of it's, circled,
Yeah.
pending details, but they have an indication it'll get done.
All right.
Management's been working their tail off, to be honest.
They have.
We
They've alluded to the fact that they've been in these talks for a while, and we've had press leaks that the lenders are sitting at a round table talking about it too. So we knew this was coming. We just didn't know when.
This is months worth of work. They didn't come up with this Wednesday last week and they're popping a deal. They've been talking about this for a while.
Yeah. For those that are asking about the collateral, we talked about that at the beginning. Please rewind to the beginning. It's the very first thing we talked about. And we will be talking about it more later this week. Don't worry. 500 million, the second bullet point, 500 million of the 1012 PIK toggle due 2026. I think they had about 770 million left on that.
And the rest is what? Swap into no cash. It was
there was a debt for equity swap a few months ago, Sparky, so it was 900 plus, and they swapped some of it.
No, but I think part of this is 500 million of a fixed PIK, and then some portion of the rest of the 780 will be, they'll have some kind of offering. And I don't know if that's set firm yet, but I think that's what they're going to do to try to get rid of all of them.
Yeah.
Let me finish reading the bullet point, and then I want you guys to pick it apart. 500 million of the current existing 1012 PIK toggle will be due 2026, will be exchanged into new secured term loan. That's key, right? That's not going to be a subordinated note, or maybe it's not key. You guys tell me in a second. Due 2029, or repurchased with proceeds of 414 million new exchangeable notes due 2030. All right, May, ladies first.
Oh, I think we have to actually scroll down because the other part that's relevant is the rate on the new exchange. That is so exciting.
Yeah, I think there was one more part.
I'm not sure it's in here, but it's 6.8 versus 10.12.
That's the exciting part, because it's not only has it been moved from a 2-year duration, it's actually been moved to a longer time period at a lower rate. That's like renegotiating your mortgage for both a longer period and a lower rate. It's like the best possible situation. I thought it would be convertible debt. Nope. That's like way better than I would have ever.
But May, when they talk about 414 of exchangeable notes, does exchangeable mean convertible?
No. It just means that you'd exchange it. So you'd either exchanged into newly secured term. So either you'd exchange it for the 2029s, or you'd exchange it for 2030. That's how I'm reading that. Sparky, are you reading it differently somehow? Because because it's going to be exchanged into another PIK toggle at 6.8.
All right. Well, they do talk about dilution in one of these press releases. So
yeah, the third bullet point.
Okay. So exchangeable notes is not convertible notes. I didn't know that.
It shouldn't be. No, it shouldn't be. I mean, like this is just exchangeable into notes due 2030. Look, I have criticized Citibank, which is their main banker, every single time they put out a press release, a proxy statement, anything. It's like the word, like it's as if they were so exhausted that they didn't just hire a third person to read it and be like, you realize that the verbiage is very confusing here. Do you know what I mean? So I blame Citibank or whoever the banker was on complete lack of clarity. But this looks to me like you're going to exchange the 500 million of 1012s for either loans due 2029 or loans due 2030. That's how I'm reading it. Not weird structure that converts.
Which is why we kind of said a few minutes ago, this deal isn't done yet, because they haven't even decided what they're going to do. We got an or situation here.
I think it's going to come down to what interest they get for both. Like I say, if they all of a sudden get a bunch of interest for the 30, what that'll mean is they probably can crank down, say, okay, we'll do 700 million 30s and only 200 million or whatever it is of the other one, but the spread's going to be X and it'll be tighter execution.
I mean, the deal is done, just the fine details of how it's going to play out.
And you have to bring in, the bulk. Like I said, it wouldn't surprise me they have the most of this negotiated, but you want to bring in as many people as you can too. There's a whole bunch of holders of 1 million or 2 million bonds that weren't part of any of these talks that they also want to bring in, when they do a formal tender. I think is what's going to happen.
Platinum, we'll get to your question in a second on the dilution in the prospectus. All right, third bullet point: opportunity to reduce debt by 464 million through the conversion of exchangeable notes into equity. How is that? Why is that a separate bullet point? Do I need to scroll down?
Opportunity to reduce 464. Oop, wait, go above. That's actually by itself, I think.
It is by itself right here.
Oh yeah, that just means that they can. They're that it's already the case that the debt holders have agreed to. I mean, they must have a very strong indication that someone is willing to convert.
All right, so this third bullet point is debt converted into shares.
Right.
Yeah. So that's,
that's how they're reducing the 400 million, because we were all trying to add up. Okay, how do you reduce 400 million just by doing new deals? And this is probably how they've got lined up. Before they were doing these little 20, 30 million dollar a shot.
We're out at 400. Yeah.
They've got a group that's willing to take 450 million or whatever it is lined up.
So this is, for people in the audience, the third bullet point is your debt for equity exchange, your dilution.
Yeah.
Right.
So kind of a range of things. This is the thing that I think both Sparky and I probably are confused on, right? You've got all this debt issuance and you're kind of like, what happens now? Okay. So it could be, let's just go ahead and exchange it now. Or it could be that the guys that are taking the 2026 and 2029 at a PIK toggle rate of 6 to 8%, they're like, listen, we're only taking 6 to 8 because we know that we can actually swap it into equity at some later time. So it depends how they negotiated it, which quite frankly, they should, this is the banker's fault. This isn't AMC's fault. It's probably crystal clear to whoever's on the other side of this discussion. This is I'm sorry, Adam Aaron, if you were watching this, your banker sucks at writing press releases. Come find either Sparky and I. We will write it for you. You pay us a little consulting fee. It's all good. Right?
But Tony, you and I have talked about too, when they do this, what would be that would lead to a potential upgrade in ratings? Obviously, off of that CCC stuff. Well, if you start adding, $500 million in equity and taking out $500 million in debt, your leverage might go from 8 to 6. I don't know exactly what it is, but you could significantly get better terms on anything you're doing if your leverage goes down. And like I say, if they slip 100 or 200 million in cash raise in one of the senior loan things, and all of a sudden now your leverage is even less because you've got cash, and this is actually very fascinating public finance.
Really cool.
The other thing that I want to kind of hammer home is the reason I keep saying this deal isn't done is that third bullet point says they have an opportunity to reduce the debt by 464 million. It's not that deal hasn't been signed yet, right?
Well, I would say what Sparky's saying is so intriguing. I hadn't remotely considered it. So he's saying that, look, you've got Q3 and Q4, which might come in better than expected. In other words, cash flow positive, right? And then you've got this potential where they're within kissing distance of a ratings increase, given that now that debt's at 6 and 8%. So if it's as simple as just go ahead and doing the dilution and then allowing the rating to bump up so that you can now go in other ways to go raise more capital via the debt markets. And
if you needed to, yeah.
Yeah, then actually it's like even though everybody's always like, they're going to dilute the equity holders, it sucks so bad. You know what? No, not so bad, because if you can actually get that interest rate down for the remaining debt, or alternatively just buy back the debt, then yeah, you take baby moment of dilution for a very short period of time, and then you're done with Odeon. You can start buying back stock. That's why I'm always like, I wonder how much of this allows you to get Odeon. But that's a brilliant point, Sparky. I definitely didn't think of it. Did that make sense the way I said it, Tony?
I don't know how brilliant it is. It's just stuff I've seen.
It's just every day for you. I got
the way we all think a little different. It's just some of the conversations Tony and I had. So how do they get this all to go? And the answer to me has always been, if they can raise a little or a lot of equity, that just makes all the numbers that much better, and it really shaves off the front end, And one thing I'll say about Citi and PICs, I can remember from my 30 years on the bond side, is Citigroup was one of the first ones I remember. They had a lot of their debt in PICs, And the reason they do that, I don't believe the maturity is allowed to be payable in cash, but they can force, if they had a short-term cash crunch, the reason those exist is they can make their bond payments, their coupon payments in stock. I mean, I'm sure there's rules and other things they do, but that's why they do these things. Is it does in very tight times, it frees up cash because they're allowed to send bondholders of these bonds shares, and they don't have to pay. And what is this? It could be 40, 50, 60 million dollars every 6 months if they were in a pinch.
Yeah, this is a super complex move. So there's
very complex.
No way that everyone understood it. So if you guys are watching and have questions, just put them in. I get it. It's like there's advanced, and then this really is that 3D chess that everybody jokes about without a merit. It really is.
There's a lot of the three of us reading and then going, wait, what?
We've been doing that all day.
If you're like, what did they just say? Because even we're kind of real time kind of thinking through this.
All right. So in the summary here, in the paragraph underneath, it says the company extended the maturity of $1.6 billion of the debt from 2026 to 2029 and 2030, further enhancing the balance sheet. The company has also arranged for the potential repurchase of up to $800 million of additional secured term loans due 2026, in addition to the $414 million of new 6/8 PIK toggle, replacing the 10/12 PIK toggle. The company has arranged for potential issuance of up to an additional $50 million of exchangeable notes in order to repurchase additional outstanding debt due in 2025, 2026, and 2027.
That's those little kind of
that is.
Adam, those things are so tiny interest rates. I own them.
I have them on my spreadsheet. We'll look at it. We'll look at it in a second.
There's all sub 7%. Just let them be. Let them be.
Well, but my guess is they'll tender for them. They're not going to call them at par, but if they go out and tender for them at 80 or something, I mean, if they that's why I think it's only 50 million. They don't expect to get all of them, but if they can buy them back at 10% or something, they probably should do it.
VRO's Trades is saying in the comments, VRO says, why are people talking about dilution? This third bullet point, conversion of exchangeable notes into equity, the opportunity, the company says, to do that, if that happened, that would be a debt for equity swap.
Yeah,
which would be dilutive.
It's a bigger version of what they've already been doing.
Remember, dilution, guys, could be you guys commonly think of it as a ATM offering where they sell shares into the market or to through a private transaction. But debt for equity swaps are also what we call dilutive. So in my vernacular, I still call that dilution. It's more shares coming into the float.
But you're done at that point. And the only reason I'd be cool with them doing that is Odeon needs to go bye-bye so that AMC can start buying back shares.
Odeon's debt needs to go bye-bye is what.
Oh, yeah. Sorry. Yeah. I mean, look,
you're going to scare people.
Because honestly, the international business is ever so slightly less profitable than the U.S. business. Now, do I think it will always be that way? Maybe not.
Yeah, but Cineworld is in trouble over there in UK. Did you see that, May?
Yeah. Oh, I didn't. Thank you for.
Yeah, I have a video from a week ago. They are contemplating filing bankruptcy in Europe, in the UK. Cineworld, who just went private and got all of their debt wiped out. They're bailing water trying to stay afloat over there. Go watch that video.
I'll have to
Not Cinemark, Cineworld.
Yeah.
The one that already went bankrupt in the US, having problems in the UK, shutting down. I can't remember the number. They're planning immediately on shutting down like a quarter of their theaters. And I'm thinking that's more money coming to AMC, baby.
Yeah, I agree.
Shut those theaters down, Cineworld.
I wonder, what do you think, Sparky? Because if that's happening, then, you get a private equity company that probably deals with that. And then they might actually want to buy the Odeon, like outright.
But see, you don't know. I mean, there's an economics to everything. And you won't know they're doing that until they do it, I think, is what it comes down to.
I know. I'm just selfish. I want it gone so this company can finally buy back its stock for once and for all.
Okay. I want to know from you guys, are there anything, we read through that paragraph we read through, the 3 bullets above, is there anything that jumps out to you in the further details? We got 1, 2, 3, 4, 5 more bullets, as if this wasn't enough of a detail. Now we got 5 more layers re-explaining the same thing.
But you need
I'm
those
sure it's
bullets.
legalese and what they have to release and best offer and intend to purchase. And
Yeah.
I,
1.2 billion of
mess.
new term. All right, so 1.2 billion of new term loans will be in consideration for 1.1 billion of the existing term loan, plus 100 million of the 1012 pick toggle. Okay, the new term loan, that new 1.2 billion, bears interest at the SOFR, the secured overnight financing rate, which I think that's 5 3/4 right now.
Yeah, it's gonna be close to the U.S. Treasuries. It always
plus
is.
600 or 700 basis points. So that would be an increase on the rate compared to the current term loan, which is at 8 and 8 and
it's 8.53 or something, but
8.4,
whatever it is.
8.47.
Yeah,
but that I don't know, the rate matters as much as they have to do this. They have to move stuff out, and you're getting it out a couple of years on the curve. Depending what the terms are, if their numbers get a lot better in 2 years, they probably have some kind of premium out of this. I'm guessing, if they got to pay 105 or something to.
That's something we need to go look into, because, they would probably want written in there. And this is also adjustable, right? The SOFR is an adjustable rate.
Right.
So if the Fed drops rates, then what AMC is paying,
then it absolutely helps them almost immediately.
This is not a fixed rate that AMC got locked into. They're paying 4% more than they were. This is a adjustable rate.
Yeah, I guess the other thing too, so the SOFR section will be adjustable, and the verbiage on depending on leverage levels, 6 to 7 basis points, or 600 to 700 basis points, 6 to 7% is below the triple C minus rated iOS spread. So you're like a full almost 300 basis points, 3% below. So they're giving them essentially what you'd expect for double B rated, I would imagine. I have to double check.
When you say below, what you mean is better than.
Better than, yes.
They're getting a rate better than their current credit rating.
Yeah, so
justify.
So that also suggests, by the way, that the triple C minus rating is probably going to be up for discussion for S&P as it decides, and it will probably be a few months, because we'll want to see earnings go positive. We'll want to see some consistency with cash flow and all of the metrics that are used from the debt agencies, which would be related to the ability to pay back your debt. So EBITDA, free cash flow, everything that we've always been talking about. But if those leverage levels improve, then cool, because that 600, 700, you could see also shrink along with whatever happens with SOFR from quantitative easing. So you could see this actually right back at 8 and change in a very short period of time, given that interest expense before on an annual basis was really high. And now some of that is gone or pushed out to and termed out.
Sparky and May, you guys are getting me really excited, and I want to fire off a bunch of rockets and pop some champagne, but I'm going to not do that on camera. I'm just going to compensate by smoking a cigar.
Well, this is Monday for me, but I'm drinking wine. I use my glass that's the size of my head, which apparently you guys all tend to like. So
I guess the only thing I would say, and I've never owned AMC. I'm not shorted. I've never had puts. I've never owned the bonds or anything. The company's doing what they have to do to survive first.
It's really impressive.
And then, as convoluted as the structure may end up being, if they're moving in the right direction. So if they actually get box office improvement, God forbid they start making some money again, my guess is this $1 billion structure they just made probably has some kind of economic call that doesn't make sense now, but if they become a double B credit, and all of a sudden they can fix the rate at 6% or something, then it costs them 5 points to do it. They'll do that down the road. I mean, this is
Platinum. I see your comment. She's asking, are we going to go over the prospectus? I have in another tab up here the 2 filings, the 8K and the prospectus, and as long as we have time tonight and people, May and Sparky can hang out and people want to see that, yeah, we can go through those quickly. I'm just trying to, for the people that don't want to stick around for that level of boring accounting and reading filings, we're trying to hit on the high points first and give people just a general sense of what is going on here.
Somebody
And
asking there, Tony, what percentage of dilution does this bring? And
okay, so yeah, AMC has right now issued, I saw it in the filing, 356 million shares.
Remember, we were waiting for them to do that. So
I had been estimating 359. If you guys have been watching my videos, you already know that we're not 295 million shares. The brokers are out to lunch here. I don't know why the share count never got updated, but we've been sitting around 350 million shares, close to 2 billion market cap for a while, even though you don't see it on your broker. And I got confirmation today in one of the filings around 356 million. The company has 550 million available, outstanding, authorized, sorry. So that gives them just shy of 200 million shares to play with before they got to do the oh shit moment.
But you got to really give them credit and appreciate the fact that the improvement in interest expense, number one, is significant. And also, it's always been the case that we felt that the back half of the year on the box office was going to be stronger and that 2026 would be stronger. So if the stock price, the dilution is relative to the dollar value. It's not relative to the number of shares. If we get some lift because free cash flow is quite positive in the back half of the year as well as in 2026, there's no reason why they would be selling shares at $5 per share.
Yeah, I guess maybe that's a very basic question. As we've read through what we've read through so far, are you seeing anything that's screaming at you, hey, they're going to pull the trigger and dilute through debt for equity tomorrow? Or do they have some runway here? Sparky?
I think they have runway. I think that's why they're doing it like they are in that 400 million they're talking about doing it. Again, unless they have a lot of that lined up already, I think this is a filing that allows them to kind of keep doing what they're doing, but more specifically with an amount on it. So
I kind of think the same way, and I'm no expert like you guys are when it comes to debt restructuring, but if they already had it lined up, they would have told us about it today.
I totally agree with the two of you, because if you think about it, the last transaction that they did looked to me like they were re-upping the loss to working capital, given that they were in a cash burn. So to me, they've created so much runway that there's no need to do these like last minute, I'm going to try to desperately ask for an equity raise. I mean, I would be really shocked if they did it before Christmas, to be honest. Christmas,
I personally, what I think they should do, now I don't know if this will work, but let's say, I don't know that the stock's going to like all of a sudden tear and go up to $7 or something, but let's just say it stays firm, $5.5, $6 or whatever. At that point, I think they could come out without a whole lot of damage to the stock and say, look, here's all the stuff we just did. We're saving a couple $100 million. We want to make sure we have the capacity. You're not saying we're going to sell more shares, but we want to up our capacity in case we need it. And I think the market on good news would let them do that.
Yeah.
And even if they say, hey, we're not going to sell shares for 3 months, or our intention isn't to, but we want to have the capacity because we're using it up. Every time we do one of these convertible into stock stuff, they do have to block out those shares. That's just like a convertible. So they can say, hey, we did this restructuring. We had to block out 100 million shares. We're going to up it just so we have them if we need it, so.
Yeah, it protects them going forward, provided they have the runway, which I believe they do now with this. And also the fact that we are all, knock on wood, nothing crazy happens. We are all expecting a stronger second half than the first half, and a very strong 2026. They have a lot of runway now. If they come out, I mean, the real nail in the coffin of the shorts is if they actually come out significantly lower on cash burn this quarter.
Yeah, that's what I see. That would be the one thing I would be worried about.
If I was short.
I'm not short. Don't send me nasty messages. But either this quarter or even next quarter, if they're at 150 million instead of 200 or 250, and they don't even necessarily raise cash. Tony? What did they have? 660. I think you and I agreed they probably shouldn't go under 500 million.
No, definitely.
I don't think they go. I think they have positive net cash flow with the raise that they did.
Oh, because the interest, yeah. Well, I mean, there might be some banker fees in there that kind of mess it up.
I already factored that in.
Good.
That might be spread out, but I think my point is if they burn 160 instead of 250, and it gives them cash of 500, and then you can go add in whatever savings you had. If right in the bank they have 500.
I mean, Sparky, they just raised 250 million in order for it to drop to 500 million. You'd have to have a massive cash burn.
I think that's what we were talking about with the one analyst. So
I did a video on this in detail.
Yeah.
On Thursday or Friday
of last week. I don't watch any of your video. I just participate. I don't watch any of your video. No, but you're right. I had forgotten about that, to be honest. So yeah, so if
I did a video on it, and I want to get to Zach's question because Sparky, this is what I messaged you earlier today. An analyst said that AMC was going to basically burn $350 million, and I'm like, how could an analyst know that they're going to burn $350 million? And he must be ignoring the cash raise that they did.
I think he just was ignoring that.
These comments are funny.
So yeah. I called him up, and I called him to the carpet on the phone, and he hung up on me after saying, no, my numbers are right, or my numbers are right. I guess we'll find out, but Zach is asking, and Sparky and May, I want to see what you guys think.
Yeah, I agree with you.
could that analyst have known something, like maybe AMC already spent some money relative to this deal?
Well, and you and I talked about this, Tony, that if all of a sudden in this whole filing stuff, they came out and said, hey, there's only, instead of 780, which is what we thought they had in the picks, if they said, hey, there's only 500 million left, that to me means they would have paid cash for those because they wouldn't have done a filing. But the fact that they're still talking about 780 million outstanding they're working on, that means they didn't spend cash on them.
Yeah,
I'm still going with the analyst was incorrect, and
yeah, I think he just was wrong. He just
my spreadsheet remains undefeated, but we'll find out in a few weeks.
But that's the point. When they actually, whether it's on the 8th or if they pre-announce something, everything will be in there. You'll have every ounce of information you need when they issue that.
The other thing I just wanted to touch on, but to break up the monotony of talking about these bullet points on the press release, and we'll go back to them in a second, is price action. A lot of people were very bullish when the debt restructuring came out, and the stock immediately got halted for an hour or so, and then it ran up. And you guys can see the supply zone that I have drawn up there in red. It respected that supply zone, and the price got pushed right back down real quick. I don't know if it was necessarily the supply or shorts willing to short it right there, or it just was maybe a retail versus Wall Street battle of retail being bullish about the debt restructuring and Wall Street saying, yeah, but you didn't really read the details yet.
I think that's what it is. Is they're just we don't know yet, and you may not know for a while how many shares are going to be part of this. So
all I'm going to say, guys, is I tried to say it on Twitter today. I don't know where it was going to reopen after the halt, and I don't know what's going to happen with the price action. But we kind of got an indicator by the end of the day, and I think here's what I think. Over the rest of this week, as Wall Street has time to digest and maybe AMC provides some more communication exactly what this is, then we'll get a better idea of where it's going to go, the price.
I think it goes into what we're laughing about almost as you look at this very complicated release, and it's gonna take even the pros, I think, a little bit to digest what exactly they're doing, what the options are. Are they going to do? What's the assumption on $460 million worth of new equity? Is that over a year?
Which, again, I'm going to reiterate what I said at the beginning of this video, this live stream. If you're already seeing videos and tweets from people that say they got it all figured out.
They don't.
They don't have it figured out. So take everything with a grain of salt, especially if you're seeing bearish or conspiracy level discussions about what AMC is doing. People are still trying to figure this out. And if these conspiracy nut jobs who never once have talked about a financial statement are telling you stuff, they don't have it figured out. They're just going with their narrative of, I hate everything AMC.
I will say one thing that allows the stock to still be a little bouncy, but certainly not as bouncy as it's been historically. The one thing that I'm really looking for, and until then, I feel like I have time to continue to accumulate AMC, especially as some of my bonds do whatever they're going to do, is if they pay, if the Odeon debt gets resolved. The Odeon debt is holding the company back from stock buyback. Right now, the bear thesis is taking an absolute hit on the fact that it absolutely at no point right now can you still be, if you're a bear still arguing bankruptcy, good for you.
I heard one of them doing it last night, May.
Yeah, you're done, sweetie. I love you, and I love you.
I was laughing my ass off. He's like,
done on your bear argument. So
this company's going bankrupt. There's no movies coming out. They've only made $700 million this quarter. I was laughing my freaking ass off. What a dipshit.
You would need another COVID, all right? So like at this point, bankruptcy is not the thing, but stock buyback is a real thing. Because if you think about how much they've shored up the balance sheet, if you really do get free cash flow generation, which in the, 250 million in capital expenditures, but you used to have closer to 500 million in operating income or operating free cash flow, right? So that's a huge amount of money to start buying back shares. So the real nail in the coffin is when we see a full resolution on Odeon, in my opinion, until you will get a very volatile stock. You might get your massive short covering. I'm never against the MOAS.
The Odeon debt, someone's asking how much is it? I'm showing May 400 million at 12 3/4.
Yeah, I thought it was like 500, but it might be 400.
It's not a crazy amount of debt, but it's the one thing that stops them from being able to repurchase stock right now.
Yeah, because that's the debt that has the worst language in it, I think. The covenant or whatever, I think it's got an asset test and a cash flow covenant in it or something.
May, they say, don't stop talking. The sweet, soothing sounds of May.
The one thing I want to answer on there, and it slipped off of here, I think it was Kalula or something, talking about, there was a 20 price on Schwab or TD before this. No, the range of the day was 482 to 576. If somebody has a bad single point $20 price on it, they're not trading hidden in a dark pool or anything weird there. It's just a bad feed. There is no magical place or where stock trades 4 times higher than what it's actually trading at. So people need to get over that.
All right, someone said my gain is too high. I'm going to adjust it down, and I'm going to move the mic a little further away. So let me know if that's any better. Let's see what else we have here before we look at the filings themselves. The second bullet point, AMC and subsidiaries issue approximately 414 million of exchangeable notes for cash, with proceeds used to repurchase 414 of second lien notes. Second lien notes. Do you guys think they're talking about the PIK toggle there?
Yeah, it's got to be 414.
It has to be, because I think that's the only second lien they have.
That's what I see on the spreadsheet, and I'll pull that up.
None of the loans are second lien; they're all first lien or senior. So it's got to be the toggles.
Third bullet: AMC entitled to issue up to an additional 800 million of new term loans in order to purchase existing term loans. That the term loans is talking about the 1.9 billion.
I think that just is giving them the flexibility, depending on what interest they have, where the structure comes in. Do people want 29s or 30s or whatever it ends up looking like? It just gives them the flexibility to do what.
So they're taking down 1.1 billion of the term loans in this 1.2. 1.1 is going towards the term loan, and they have an option to do another 800, and that would
But wasn't
completely
the original
refinanced.
1.9? So I think what that's telling you is if they can't get this this chicken soup of stuff they have to take them out of different structures, if all of a sudden that falls apart, they can just do a total of 1.9 or 2
Right.
billion of what they started with and redo it. I think that's all that says.
Yeah, that
The,
sounds fair.
the fourth bullet point is that 50 million for the small chicken feed, little other.
Leave it alone. It's such a low interest rate. It's not
Well,
worth the
but
penalty.
again, you know what? My guess is they're not going to call them. They'll go out. They'll go out
Why?
and
It's so silly.
tender for them at 80 or something. They'll go out and tender for them at a level that makes sense. And if they get them, great. If they get them, great. If they don't, they won't issue 50 million of that. I think
Yeah, I mean the
that's what that is.
27s traded up to 75, which is crazy. A yield to maturity of around 17%. It's still worth tendering, I guess, the 27s, but who cares? It's like so tiny. It's a
Yeah, but
5 quarters.
my guess is if they can clean it at some kind of reasonable economics, if they can get rid of
Right.
the 25s and the 27s and not kill themselves on the rate, they'll just get rid of them. That's what.
Yeah. Yeah.
And
so
then
debt,
the
basically.
last bullet
Yay.
point, the last bullet point here, and then I'll put up the spreadsheet. We can just take a visual. I'm not saying the spreadsheet is 100% correct, but you guys can pick it apart and ask questions. Where I try and take all of this and map it against what we have. We have 464 million of exchangeable notes, which would be exchangeable into up to 92 million shares of the company's Class A common stock. And I know Platinum's going to ask, why does the documents, the filings say 123 million or whatever? I don't know the answer to that yet either. Have you, either of you guys, Sparky or May, read through and
My guess
understand?
is they're leaving room for whatever this is going to end up looking like.
Maybe approximately 92 million means at today's current price, and
Yeah.
123 million is that's the maximum that they'll issue.
Then that could be the economic maximum they'll do. And again, I haven't been involved in a high yield refunding structure deal like this for 5 or 6 years, but it's all best effort. They're going to go out. They have the basic layout of what they want, and they're going to fill orders in the direction that makes the most sense to the company. They may not completely do one of these options. They may not do it all. If they get $3 billion in orders for a term loan at some level that makes a lot of sense, you may not see any of this stuff. You'll see 1.9 million of a loan at 7.5% or something if they get it. It might not even be a floater. It all depends on what they get back.
Yeah. So the only other nuance, because I can see that there's like kind of a confusion, is I totally agree with Sparky on all they're trying to do is get to that number 646. Remember, from their perspective, they're not trying to dilute for the sake of diluting. There's something they're trying to do on the debt side. So there must be, when you add up the debt, a number that comes to 464, and so that's what the number is trying to pay back. That's your use of proceeds.
And maybe it gets them to 6 times leverage from 8, which is again what we're talking about. Maybe that's the magic number for them to become a double B credit instead of a single B, or triple C. There's some method to their madness.
Yeah, Tony, on your side, if you go to the St. Louis FRED website, then you can look up the typical iOS spread for double B and triple B. The iOS spread for triple B, or excuse me, the iOS triple C. Sorry, so the iOS spread for triple C is like 9.3% right now. So if you look at the difference between that credit rating and the immediate next credit rating, you can kind of see what each notch would mean as relates to interest expense. But it should be on if you like Google search
Fed St. Louis.
Yeah, FRED, iOS spread, and then.
Did you say spread? I thought you said Fed St. Louis at first.
No.
Yeah, I'll put it in the private chat just to help you with the Google search terms, but it should come right up.
At some point later this week, maybe I'll do a summary video once we really have this all sorted out, because this is still kind of a working session.
Tony, I'm not going to deny that I'm privately enjoying when this thing all gets priced and the amounts are put in for what they do. It's going to completely destroy your spreadsheet, because no matter what you plan for them, it's going to come in some completely different combination.
I just wanted to try and map the bullet points from the.
Here's some.
Oh,
From
you
the-
did it. You did it beautifully. I just think there's a chance that it comes slightly different.
Yeah.
But anything
So
that's different will be for the benefit of the company. I guess that's
here's what I took away. We don't even need to go through the spreadsheet, but here's our before debt, what we have right now, and as I looked at the after, here's basically how I'd summarize it to you guys. And Sparky or May, correct me if you think otherwise. They're not really paying off any debt from what I saw. They're restructuring everything.
Yeah.
the only thing I think that
And-
would potentially be a payoff is if they do 400 million an equity swap for some pick or
That-
something. That would be, but that would be the same treatment as everything they've already been doing.
Right.
Whatever that
Last
amount
bullet
is.
point.
Yeah.
That last bullet point about opportunity to reduce debt by 464 million through the conversion of notes into equity.
But I would agree with you. I don't think they're getting rid of anything or adding anything. The only thing that may get added, like I said, if they have the opportunity to raise 100 or 200 million, if they think they need it and there's demand for it, my guess is they would do that because it saves them having to do an ATM offering later if they want, if they needed it.
I really think it's massively underappreciated that this debt was done at 68% picked hog.
That was my first thought was how in the world did they do that?
Yeah.
That was my first
that's
thought
the
was
reason to actually drink the wine, to be honest.
that was my first thought was how in the world did they do that? I thought they'd do it
Amazing.
I thought they'd do it at 10 and it would be just great that they still had 10 but moved it out 3 years. I don't know how they're shaving it off.
I didn't think they'd even get it done at 10, to be honest. So 6 to 8 was beyond anything I was remotely considering. I thought term it out so the interest payments are lower, but if they could just try to keep it the same, or alternatively they have to do some crazy convert to get it done. But that's like everybody should be high-fiving to me on that. It's amazing.
I've been high-fiving myself all day, May.
Oh, good. I have to finally join you on that.
Okay, so let's try and push through these two filings. How many pages do we have here?
Just for the folks that are still kind of learning, like this kind of renegotiation is as if the bank still knew that you had problems and rates were still much higher than when you originally did the debt, because that debt was done during COVID, right?
Yeah.
It would be as if that happened, but somehow they were like, you know what? Screw it. Instead of you having a 7% interest rate, we're going to give you a 3% rate. How about that? Like, it is so insane that the debt hold, in such a beautiful way that the debt holders were like 6 to 8, call it a day. There's going to be some machinations.
All that shows you is demand and
that's a good point
it's
too.
demand and optimism.
Yep.
It's a combination of those two things. If
You're totally right.
again, I don't know a whole lot of money managers that'll buy a triple C thinking, hey, this might be a double B in a year. But if they really think that, then
right.
I've already been trying to contain my excitement so as not to seem like I'm pushing a stock, as people try and accuse me of all the time. Been trying to contain my excitement about the box office for Q3 and Q4, knowing what is coming down the pipe, and then to have this drop on top of it is
but I
just
think
like
that's part of, you and I talk ad nauseum, not necessarily on a call, but just when we're going back and forth, is the entire piece of this that was most important was optimism for the box office, and they're getting it. So this is the time to strike. You don't want to wait till you have a bad quarter and try to do all this. Then you won't get it done. So,
so this is the 8K. There's a couple things in here we'll push through. I think none of us there. Okay, so it says there is a newly formed, wholly owned subsidiary of the company AMC called MovieCo LLC, which I think a couple of people have told me is a old company, by the way, long ago, that got, I think, bought by Carmike, which got bought by AMC. So it seems like they're recycling the name. I don't know that that's important. It might just be interesting. But MovieCo is a newly formed subsidiary. The company and MovieCo, and that part, guys, we don't have all of the MovieCo piece figured out just yet. So
yeah, no,
I want to be clear on that. That's something I'm going to be spending.
That's the part that they moved some leases and did some stuff.
I'm going to hit on the highlights of that here, Sparky. But I want to just be upfront with you guys. We don't have it all figured out.
Oh.
So that will be something as I figure it out, or the company tells us more, then we'll go over that. But the company and MovieCo, each as a borrower, and the lenders, which is Wilmington Savings Fund Society, as the administrative agent, borrowed $1.2 billion of new term loans. So this is just more color on what we were talking about on those bullet points. Then they talk about the 1.1 billion, the 414 at 6 and 8. And then this was the interesting part that I think a lot of people are focusing on, maybe rightly so. We need to know what exactly is going on here. Sparky and May have already said this is, in their opinion, not something that the lenders would allow to happen if it was something that was going to be detrimental.
At worst, it's neutral, and it's if it allows them eventually, not that they're going to sell it now, but if they ever want to sell that unit, that's good for current bondholders if they sell it for $1 billion or something. I mean,
the company
looks like
transferred
if it were
the company transferred certain leases, owned real property, and related assets and rights in respect to 175 theaters to MovieCo, along with certain intellectual property, including the AMC brand name. I wonder if the asset transfer agreement is down in there. I haven't read through it if it is. MovieCo and AMC entered into a management services agreement, as you would expect, pursuant to which MovieCo engaged AMC to manage and operate the transferred theaters.
You know what I think this is, Sparky? I think this is a classic asset light move, and they somehow managed to do it despite the operating leases.
And it could be. I mean, it all comes down to what the language is in the leases. If it's it just
and
like I said, whatever it is obviously not detrimental to AMC debt holders, or they would never have let them do it. And it probably doesn't hurt the lease, the actual leases, because if they're being paid, if they're current leases, it really doesn't matter where they're held. Even if it's held to subsidiary, any gain from them will go to the parent unless there's a bankruptcy, and then they're separate. So
yeah, but they'll monetize out the IP. If the issue is they think they can monetize the IP somehow because someone would buy.
100. Yeah, I mean, it'll be
I think this is like a very aggressive asset light strategy.
Yeah, I mean, there's YouTube channels out there think the BBYQ IP is still worth $4 billion. Maybe the AMC
already got sold, Sparky.
Does that make sense to people? You guys write in the comments if that doesn't make sense what we're saying.
This is interesting. I was speed reading this earlier. I didn't see this part. MovieCo is a direct subsidiary of Centertainment Development LLC. Each of MovieCo and Centertainment is an unrestricted subsidiary and therefore not subject to restrictive covenants under the covenants governing such indebtedness.
Yeah, but that goes back, Tony, where you and I were talking that I don't consider lease debt anywhere near the same as bond debt. So it just might. My guess is there's probably just some accounting. There might be some accounting benefit for them to do all this, whether it's depreciation or amortization or something. There just might be something in there that, if it.
Oh, that's a good point. They could really take the L if they're allowed to take a further L to reduce tax liability on the.
That's what I'm saying. I mean, and it may not help them right now, but people do stuff years ahead. If they're eventually going to be profitable and they could, maybe they could speed amortize, non-performing leases or something. There's just a reason they're doing this that doesn't hurt anybody, and there must be some future reason they think they'll get a benefit from it. So
my best guess is that someone has an interest in buying that IP such that they would fund that subsidiary and buy the stock. So it almost looks like they did kind of a weird SPAC structure where they bought some holdco that is called the Center, that other name,
whatever
it is. Center, what's it called?
Centertainment.
So they probably bought Centertainment for something cheap because they were broke anyways. They jammed all the IP into it because they do think they have a buyer for the IP, such that somebody might want 25% just of the IP to give them cash for it. And they're like, F it, fine. And so,
I mean, AMC's got a gold company laying there. They probably could have shoved some of this stuff into. I think I don't know why
they could actually
do that already, but
that's
all
true.
right.
They could actually put whatchamacallit in it, HYMC.
That's what I'm saying. Why not? Just
really
run it through there. They need revenue somehow. Maybe they can get IP revenue from European AMC theaters that they shuttled off. It's as crazy as anything else.
It is. That's what I think that is. Don't hold me to it because I'm sure that they will talk about, like, they need to talk about this for sure.
They need to talk about it. Yes.
That's what it looks like to me. Maybe we should all send in an email to investor relations that please don't ignore this because you're all confused.
My guess, whatever it ends up being, is there's some accounting treatment they benefit from doing this.
I think you're right.
And it doesn't help or hurt bondholders, so they allow them to do it.
It does say here, Sparky, that the existing lenders consented to all of the transactions described herein.
But that's what I'm saying. So it just can't be. And they didn't ask for anything extra, and it didn't hold it up. And it's probably a very basic structure that allows.
The thing too is they could actually probably dilute this structure to their heart's content. So it may be an extremely clever asset raising vehicle.
I didn't even think about that. Say, hey, we're going to sell $1 billion worth of seed stock for MovieCo. I didn't think of that. That's
I don't know, but I'm open-minded to what the heck.
That's actually pretty genius. That would be.
If that's what it is, I mean, I don't totally understand all the details, but I want to know so desperately right now.
That'd be crazy if you're right on that, May.
If I'm right on that, even I'm impressed with me at that point.
I never would have gone that direction, but I'm thinking about it and going.
Technically, you could do it, right?
I think legally you could do it. I don't know why you would, but you could.
All right, let's see. Right?
We got the PIK, as we mentioned, at a new rate of 6.8. Those will mature on April 30th, 2030. Booyah! I'm trying to speed read through here and see because there's a lot of documents. I don't want to be sitting here all night. Oh, do you guys want to talk about the soft call? So,
is that on which one? Is that on the?
It's on the.
Okay,
is that on the one that's exchangeable for stock?
I think it's the exchangeable notes for the PIK.
The only reason you'd have a soft call is you want to, at some point down the road, you want to get rid of that structure. And I don't know what the premium is, but you'd have some kind of premium calculation on what it would cost you, almost like a make-whole call. And it just gives them, it gives them the door to go through if they wanted to do that, I would guess.
Sparky, you realize that actually makes it sound like they are doing what I just said, right?
No, that's kind of, I'm just like, hey, wait a minute.
It could. All right, I can't wait for this earnings call. I'm really
I don't think this is specific. I don't think this is specifically a convertible, but if it's exchangeable into stock at some rate, and let's say the whatever the conversion is in the money at some point, the way you get people to do that is you issue a call that wouldn't be economic versus taking stock. So everybody will run in and take stock. That's kind of what that's exactly what a convertible does.
All right, here's what I read through here. So the exchange rate reflects a price of 566. So it's 176 shares for a $1,000 principal amount, which equates to $5.66. And the soft call can be done when the price is equal to the aggregate principal amount plus accrued and unpaid interest, but excluding the date of such redemption if the daily VWAP per share exceeds 140% of the exchange price. So 140%.
140% of 5 is 7, right?
140% of 566.
All right. Well, so that's maybe it's $8 or whatever it is. So I'm guessing what this says is if the stock's above $8 at some point between now and 29 or whatever this is, they'll issue, if they want to have it roll to equity, they'll issue a soft call, which will economically make people do this.
Okay.
And the debt goes away; it goes to equity.
Just to remind people, the soft call, a call is on debt is AMC's or a company's ability to say, hey, we're calling this debt early. We want to pay it off. Is that a fair layman's?
Yeah, it's their option to do it. So there'll be a call embedded in here that the company can force. It's not a tender. It's not, they can force a call at some price. And my guess is they would do it at a time when the conversion would be higher than what their call price is, because it makes people go convert it to stock and the debt goes away and it goes to equity on the balance sheet.
And it's immediate gain for the debt holder too. So
all right, let's see
for
what
other
else.
existing holders because it just gives them more coverage.
Yeah.
Yeah. But that's what I think it is. It's a convertible without being a convertible.
Exactly. So clever. I love this. You gotta love AMC for its creativity. I mean, like, there's nothing like it. Full props for creativity.
But and I don't know this, but we're talking about shelf and thing. Maybe doing this structure because they're in charge of the call and it's not forced conversion. Maybe this does not absorb any of their shelf. You know what I'm saying? It would be if they force conversion, maybe it does, but right now maybe it preserves 90 million shares. If they never are forced to do this and they can pay it back at par when the bonds come due, they might just have to have that shelf at the time they want to force conversion and call the bonds.
Interesting.
And
I don't know that, but that's what it looks like to me, that it saves them having to block that off for 5 years.
Yeah, well, hopefully, I'm going to keep on reading through this stuff, over the next couple of days, and maybe AMC will provide us some insight too.
The other nuance to that is that it's like, even though the diluted shares outstanding will still show this conversion factor, it really should if it's going to be correct. There's like Sparky's saying, that actually might be overstated, not understated.
Right.
Which is a big deal because it then means that equity analysts are new coming into this.
Here's the difference, and I'll talk to you about like what Tony and I always talk about with CNK having a 25% short interest, but they do have a convertible that the holder has the right to go get shares and convert them. This reads to me that the holder of this bond does not have the right to do it. It's the company has to execute something that gives them the right. To me, and again, I'm not a lawyer and I have never seen this structure, which is nothing to do with AMC. They may have to eventually add share count to this if they're going to force it. But until they do, maybe they don't have to. Maybe it doesn't do anything unless they force it to do. I don't think a holder of this, let's say the count runs up to 8%. I don't know that the holder of this bond has the right to go do that until they initiate a soft call.
Can we take a moment to say hi to our troll, Michael Anthony here? He says, what are you guys talking about tonight? Michael, part of the problem you have problems investing is you can't read thumbnails or video titles. So I'm sorry, this is probably not a good channel for you to tune into tonight. As far as pumping, I don't own any AMC. If you've been paying attention to my channel, I'm in cash. So adios, amigo. Been nice having you. You are gone. All right, moving on. In connection with the issuance of exchangeable notes, the company agreed to file a prospectus supplement. That is the second document that we're going to talk about tonight. In a moment, we're almost through this one.
Wait, so I have a quick question, Tony.
Yeah.
What do I think the real purpose of MovieCo is? I think it could be a number of things. Number one, I think it could be something that allows them to do this concept of asset light, which basically is some of the assets on the balance sheet that have value that are currently unlocked, that are currently locked in all of the other stuff going on. It could allow them to separate it somewhere such that if someone wanted to fund the company based on having the other side of ownership to the rights to those assets, it could be trying to do that specifically. So it could be a very, very unique and like unique is really the right and special way to raise equity via an instrument that would be non-dilutive to AMC, because basically the shareholder has no recourse to AMC, the company, but might be able to fund AMC via funding the IP.
Right. I
Yeah,
love it. I love it if that's correct.
So while some of the guys out there are saying, hey, no, they're going to put all the good assets in there and then try to like bankrupt, no, it would actually be quite the opposite. They would be using this new MovieCo vehicle as a funding source for AMC, non-dilutive to AMC, but 100% sharing the ownership, probably with a cap of 40%, so AMC retains full ownership of the assets. That would be my guess. That would be my best guess.
I don't even have a comment on that because I wouldn't even know where to start to try.
May,
Yeah.
if that is true, the
That is
shills will literally be in shambles, May.
They will hate my guts, because that would be my best guess. I could be really, really wrong, because honestly, I've never seen that before.
There's a couple things they came up with. In my 30 plus years, I've never seen. But what's going to come down to is they're obviously going to have to elaborate on this, either on their call or release something out. I think more details will probably come out when they actually get all the structures put together and how much they did and what the coupon is and something with a conversion, what it means. I'm guessing, because I still, looking at Bloomberg, I still don't even see a tombstone for all the stuff they're doing, which is very unusual. They usually would say, hey, AMC is in the market for $600 million of a 3-year and a 5-year and a 7-year or whatever, and there's nothing.
Sparky, for everybody watching who doesn't have a Bloomberg terminal, can you explain what a tombstone is?
All a tombstone is it's a very simplified
Prospectus.
Part of like where registration would be. It would show what their anticipated or their expected release would be. It's more fixed income than stock, but I think stock has it too, that they'll say we intend to go out and market all this mishmash they have. At some point there'll be a tombstone that says we going to have 1.1 billion of a senior, 400 million of this structure and 200 million of this structure and 50 million of this. It will be laid out what their intentions are when they go market. And I haven't seen one yet. That just because they're probably still working on it.
And just to help the people with why I'm saying that could be what the structure is. Historically, for folks that are trying to like find like what would be a good thing to read on or understand, historically this concept of asset light would have only been done if you owned a bunch of real estate, spun out the real estate, and then leased the real estate back to yourself. That's the classic asset light. What I think they might actually be doing is pushing out the IP, whatever it is that's in intangibles, and then leasing the IP back to themselves because someone else wants. And it's a really clever.
That's probably not far off of what like a sale leaseback, which every retail is still a world. I mean, every Walgreens that sits on a corner, or even Walmart, they don't own those. Some developer, some second party builds that, and Walgreens goes in and does a lease for 30 years. They get a tax benefit because it's a lease and not a payment. They get to deduct it. That's what I'm saying. This is accounting. They're obviously there's some benefit. There's some benefit for them structuring this way that I just am not in the woods deep enough to figure out what it is. But
it's definitely not common, for sure. Common would be if you actually had real estate that you lease back, right? Like that's it's fairly common at this point.
And that might be why it's surrounding the leases too, or the stores, because maybe they have company owned locations that aren't leases that are mixed in there that they could take some advantage of.
I just want to be able to explain to people in plain English what this is going to mean to the balance sheet, and I haven't figured it out yet.
Stay tuned, Tony, because maybe
I know there's going to be people rushing out videos tonight saying private equity convinced AMC to sell off all their valuable assets and set the company up for bankruptcy. But I think what you're hearing from actual intelligent people, the two below me down there, is that that is likely not what is going on here. The company has thought this out, and there is a plan, and we don't know all the details yet.
And hopefully they elaborate on it, because they certainly have elaborated on it to the debt holders, who are smarter than the three of us put together. So whatever was done was vetted with every single majority debt holder, because they wouldn't be allowed to do it if it wasn't. So
All right. Let me pull up the prospectus and let's look at that real quick. Click on it.
I think they're saying there's an echo on me. Tony, do you have some funky sound thing going on?
Might be because I have a screen share. Let me change how I'm opening the screen share.
Sorry, didn't mean to like redirect you.
No, that's fine. Sometimes Restream does that depending on how you open up a screen share. See if that's better.
Okay, whoever said they were hearing an echo, let us know if this is better.
All right, the moment some of y'all have been waiting for, all about the dilution, or what? Let's just call it a prospectus as we read through it here real quick. And let me see if we got any good comments that we need to knock out while I let Sparky and May read the first part of this. Have you guys read the prospectus yet? I scanned through it earlier today.
I have not, but I think you hit on earlier where it's talking about the 128 million versus 92. I think what it was saying is they have up to an aggregate amount, so there is a cap. I think that 128 is just a cap on what they could issue versus the bonds, which is as priced today would be 92 million, would be my guess.
Baby UFO says AMC is the Trump of stocks taking a bullet. Just nicked him in. We just nicked him in the ear.
You guys are funny in the comments. I'm just gonna give you full props.
You guys
I love the comments, guys. Half of my smiles.
I'll mute and see if it's me. I don't know if it's me or not.
Okay, so this is the prospectus supplement. Just a reminder, the company has a open S3 up to the full allotment of authorized shares, which is 550 million. And this is a supplement relative to, I think that 414 or 400, the 414 million. So let's read through and see if there's anything that jumps out at us so that we can help y'all understand. And Platinum, if you're still here, now's the time to ask questions on this if we don't get to it. The company announced a significant refinancing, and as part of that, issued 414 million of 6/8 PIK toggle due 2030. In addition, the issuer gave the selling stockholders, what is the definition of selling stockholders?
Oh, there's actually, they list them farther down. So there is some folks that are getting rid of their shares here.
All right. The issuer gave the selling stockholders certain rights during the first 3 months following the issuance of exchangeable notes. I'm going to highlight that because I'll probably come back to this tomorrow. Mm-hmm. With respect to the issue of up to 50 million incremental. So is that saying it's the selling stockholders' right to, or AMC's right to issue up to 50 more million? I'm confused now. The issuer gave the selling stockholders. So maybe it's just saying certain rights if AMC issues 50 million.
Yeah, I think it's clarified later because they do go through who the selling shareholders are, and you can kind of compare that to what was in the proxy statement on the top holders.
This supplement relates to the offer and sale by the selling stockholders up to an aggregate amount of 128 million. And in the press release, they said 92 million. So I think, and maybe we'll figure it out as we're reading through this, but I think that the difference between 92 and 128 might be relative to what is the price of the stock. Like at the current price, 520, 560, whatever, it would work out to 92 million, but it could be up to an aggregate amount of 128 million if the price were to fall.
That's roughly $4. I mean, it's a little under. So 50 million divided by 128.8 is like 3.9. So that maybe is the collar. They won't do this under 3.9.
Keep in mind, this is a working video. I'm just spitballing thoughts as I'm reading through this.
Sonny, was there something like what was in the shelf before this prospectus?
It was a open mixed shelf May for every type of security you can imagine on a
Well, they're
typical.
giving us every kind of security you can imagine.
They covered all the bases.
The equity offering is, I guess my question. What did they have left on equity?
They have about 200 million shares. I think
It was 190 or something, wasn't it?
yeah, they'll talk about the capital stock here later in this prospectus.
Okay, so that we should. I mean, for me, I'm really just keeping it in mind relative to what's left on their shelf.
Yeah.
Okay.
All right. So the other thing, I'm just looking for numbers here. The selling stockholders purchase the maximum amount of additional notes. The issuer elects to pay interest in kind by issuing additional PIK notes with 36 million shares. This part I wasn't clear on when I was reading it quickly earlier today.
I think that's just the max they can do to pay interest. If you read that later, this is the only thing PIK bonds can pay is not principal but interest. So that's backing into some formula for that's the maximum number of shares they could use to pay the interest payments if they had to on those bonds.
Yeah, that's what you were talking about earlier.
Oh, that's talking about if the issuer were to only pay interest in kind.
Right.
Okay.
It's still capped, so they couldn't, which may mean if there's a deficiency, they might have to pay shares and a little cash or something.
Got it.
You can't just win this by dilution. In other words,
I'm making footnotes here with highlighters so I can come back and try and explain it to people later. Thank you for explaining that, Sparky.
Yeah.
There is no guarantee that the issuer will elect to issue PIK notes.
Okay, yeah. This is definitely a secondary. I'm sorry, I'm farther down.
Class A common stock may be sold from time to time pursuant to the supplement by the selling stockholders in a number of different ways and at varying prices and in different transactions. See plan of distribution. We'll get to that in a minute. It's further down on the bottom. And we cannot predict when or in what amounts the selling stockholders may sell the stock. So in a nutshell, AMC already got the 414 million, right? And the selling stockholders are getting the shares.
Right.
And they have the right to sell them at their discretion. And the company doesn't receive anything when the selling stockholders sell shares.
Yeah, it's a true secondary offering of secondary shares.
Yeah, very common type of structure that we see.
They just happen to be really big. So
and they actually say that here. We will not receive any proceeds. All right. A lot of boilerplate stuff here. If I'm reading it fast, it's just because this is standard.
Yeah, a lot of
stuff. We've seen this 1,000 times.
Yeah, it pretty much covers anything they could possibly do.
This part's standard. Don't worry, guys. We're not skipping anything on purpose. The risk disclosures.
Risk disclosures. Always read them. I already have all these memorized. It'll scare you to death.
There's so many quarters, months, years.
All right, the offering up to an aggregate of 128, as we already talked about before. We talked about this already. We will not receive any proceeds. We talked about that. Risk factors up above. Here's a bunch more.
Okay, so we should mention while you're scrolling through that for the bears, they might, regardless of the fact this is very positive, the selling shareholders will put pressure on the stock short term. So whether or not the buying side of the other side of it surmounts that, because you definitely have an improved circumstance on the balance sheet, on the financials. It's whether or not these sellers actually are large enough to where you just have supply and demand dynamics being awkward. It is not any of the other nonsense that we kind of previewed earlier in this call.
All right, here is the description of capital stock. This is in any prospectus or proxy statement, a good section to always go in, or a 10Q if it's in there, to go in and check. It always tells you what is the authorized shares that the company could issue and what is the current share count. So here is our current share count.
That share count includes insiders, right? That's why the float's 356 or whatever it is.
Well, the float showing on the brokers, Sparky, is 294.
No, but
million.
I'm saying right here where it says 361, isn't that the entire outstanding, including what insiders have? So it's not.
It is, but what's not included between what your broker's showing and what this is showing is some of the debt for equity swaps that happened in the last.
They haven't caught up yet.
Right. Just the brokers, data providers have not caught up yet. Now that we have a share count in a prospectus, we might get an update on the brokers in the next couple days.
No, but I'm only asking, Tony, because you said that by your calculation it was 356 or something. Is it?
I said 359, but yeah, I was not calculating
that.
I was not calculating in any extra shares authorized for executives.
That's what I'm saying. Inside. That's what I'm saying for compensation. So
yeah, that often explains those. That often explains those minor differences. You're right. There is no Class B. I still see people saying, "Oh, AMC has Class B." No, that was retired a long time ago when Wanda got out of the play. And I wish they would say here, the company has no shares of preferred stock outstanding. For all of you conspiracy people who keep on making videos saying that there is preferred stock.
Hands are gone. Okay, get over it, guys.
Get over it. All right, Tony, you can't believe what they tell you in a filing put under penalty of law with the SEC. You just can't believe it, Tony.
Can I make one kind of snarky comment? I don't know what Baby UFO is, but they're asking.
I was being snarky. It's your turn.
They were asking, Baby UFO is asking, where will Citadel get shares to cover puts? And the answer is somebody, if they sell a put, somebody will be selling them shares. They don't need to come up with shares. They'll be getting shares. So.
Yeah, that's right. Puts we're very excited about. Do that all day long. Buying puts is where it's we're not as excited, depending on what price you're doing it at.
All right.
Shares to cover.
Meanness to the jargon learners. Everybody's got a learning curve.
Let's get to the good part. The selling stockholder. Oh, here we are. The selling stockholders. All right. This is what I wanted to get to. I did not read this earlier, so. This supplement relates to the possible offer and resale by the selling stockholders from time to time of Class A common stock described below, underlying the exchangeable notes, which is $414 million, right?
I think that's right.
Prior to the issuance of the exchangeable notes, the selling stockholders held certain amounts of AMC's 1012 PIK toggle. The principal amount held by the selling stockholders has varied over time, but as of immediate, prior to the closing of the transactions, it was $518 million. So
that's lower than I thought.
Great. About 2/3 of the outstanding balance, which is around 770.
Okay.
Oh, but that goes back to what we were talking about, Tony, is when they get this thing set up, what is that, 70% or 75%? That's what they negotiate ahead of time, and then anybody else who wants to jump in once the deal's kind of structured, they'll do a tender and they'll go look for them. But that's.
Let me throw up a question because I don't want it to pass by. I think it's a legitimate, good question, just for Sparky or May to talk to. Can Mudrick or whoever these selling stockholders are start selling these new PIK shares this week into the market?
Well, they won't have them yet, will they? They wouldn't have them. I don't know what the structure is, but the answer I would think is no.
Yeah, and you know what? Actually, use your spreadsheet to show the 518 relative to the principal amount held. Wait, does your spreadsheet have the?
Yeah, I was looking back at the press release. I think the answer to the question right now is I was getting confused if this was the opportunity bullet point or not. They did exchange them. They did exchange these, right? 414.
Well, if they exchange them, there probably still is likely some kind of restriction on it. I don't know what it would be, if it's 30 days or 90 days or something, but there's probably something in there. I don't think it's immediately they can sell them.
Well, that'll be the next. That'll be coming up here in a second. The next page is plan of distribution, so maybe it'll cover it in that. Let's keep going. We are registering. So this prospectus is to register the shares, right? We are registering the shares. No, the prospectus doesn't register them. The shelf offering registered them. We are registering them in order to permit the selling stockholders to offer them for resale from time to time. AMC will not receive any proceeds. AMC will settle the conversions of the notes by delivering as applicable cash or shares of the Class A common stock or a combination of cash and shares. If the exchangeable notes are fully converted into shares, they will be converted into an aggregate of up to 128. See, this is why I'm confused why the press release said 92. Is it 92? Oh, 92 plus 36 is 128, right? That's what it is.
Yeah.
So the 36 is if AMC elects to pay interest in kind.
Yeah, because remember, I think that's what it can pay over the course of the bond.
All right, so Platinum, does that answer your question? The discrepancy between the 92 and the press release, and we're here it's saying it could be potentially up to an aggregate of 128 if AMC elects to pay interest in kind. May, can you just talk about that for a second? What a PIK toggle is, what flexibility it allows a company to do.
The PIK toggle automatically tells you that there could be a transition interest rate, but I think Sparky's really kind of nailed it on the head. The feature where you could pay in kind using stock instead of just getting rid of your cash.
So in other words, if you had a bad quarter and you didn't want to pay the interest, you could pay it with shares.
And you have to pay it at 8%, not 6%. That's
right. Does that make sense to you guys? Yeah. That a payment in kind means we don't have the cash or we don't want to spend the cash to pay the interest this quarter. So we're going to use the payment in kind and give you shares instead of cash. That's the company's option. But I don't think
higher rate,
I don't remember AMC exercising that option.
No, they didn't. Even in the darkest days, they never did.
So that's why I'm not making a big deal about this. In my recollection, I can't recall the 4 years I've been in this play that they ever elected to do a payment in kind.
Yeah, I mean, taking a half a step back, remember that this was done during exactly as you guys are saying, the darkest days of COVID. That's when it would make sense to even have this structure, given at the time interest rates were rather low.
You would think that was when they would do it, and I don't remember them doing it.
Exactly. Yeah.
So yeah, Platinum, if they ever elected to not pay interest in a quarter, they could issue part of those 36 million shares, but AMC does not have a history of doing that. So I think that's why in the press release they went with the 92 million number.
Yeah, I don't know that happens really very often at all, no matter who it is that's issued these. I think it's just there's a capital structure reason they do them. And
I guess it depends how rough it gets.
But it gives you the option. So
it does give you the option. And
I'm not seeing rough times ahead. I'm only seeing better times ahead. So Knock on wood.
I mean, unless it gives them somehow more cash to take out the Odeon. You know how all I care about is the Odeon at this point.
You are really on that.
Broken record. Okay, I've been saying that. Broken record, May. I don't care. I need the Odeon gone. I'm just gonna say it.
All right. The selling stockholders include the stockholders listed below and their transferees, pledgees, assignees. Let's see who it is. Ah, it is Mudrick, Pentwater, and Discovery.
Yeah.
Yeah, but Mudrick's actually the smallest down there. For everyone who wants to jump all over them.
Yeah, I don't even know who Pentwater Capital is. May?
No, I don't know them very well. I've heard of Discovery, but I don't know them well, to be fair.
Sparky, ever heard of them?
No, I've never heard of the second.
All right, you conspiracy theorists, here's your job. Dig into Pentwater Capital. Get all the dirt. Who is this entity? And how did they get in there? How long have they been here? I don't remember ever seeing that name.
They might be, Tony, they might be one of the parties they're doing debt for equity swaps with that are.
Yeah.
No, it really is. It's probably somebody that has accumulated shares from doing debts. They buy debt in the open market. They go swap them for stock on some kind of conversion rate. They might not be able to sell, so this is a good way for them to sell if you think about it.
We honestly we assumed it was Antara because Antara has been so loud, but honestly, it's these three.
It's these three that have been doing the swaps.
Yeah, these three are the guys. If you were curious, I didn't know, so here we go.
I didn't know either.
Yeah.
I've been curious if Mudrick was still involved in this play, and
Platinum Sparkles knows. Good job, Platinum Sparkles.
I think she had a feeling that they never left. But yeah, we haven't seen that name come up in a while. That's why these type of filings are fascinating, because we get these little bitty clues.
Yeah, finally.
Maybe we'll get rid of them.
We also now know who's at the negotiate table. It's these three guys plus probably Antara is my guess, and maybe a couple others.
All right, I'm trying to get to the time frame because y'all want to know when can they do it. So
I don't know if that'll be in this perspective. It might be something in an individual agreement with them.
Usually, Sparky, it says something in there about when they can start selling them.
On what the conversion rate is, 176.
Yeah, that's what we were talking about before. 176 for 1,000 and principal amount gives a effective price of 566. May.
Okay, thank you. So it is done basically at recent prices. I mean, it still sucks. I'm not going to lie. For anyone who's taken a victory lap on that, I get it. I'm not taking a victory lap on that, but at least it's not at those crazy lows.
I don't think that's me. I don't know where that's coming from.
With the little dinging, sorry guys, I'll put it on silent.
Oh no, everybody in the chat's like, Sparky, it's not me, it's Sparky's got the.
Is this relevant right here? The shares of Class A issuable upon conversion are held by Mudrick Distressed Opportunity Fund, Boston Patriot Battery March.
Oh,
I think that goes back to what you're saying. They're the secondary body that holds these shares that'll be utilized to convert them if a bondholder comes and says, I want to convert them, they're not coming from the company. This is a list of people that have them that are backing the exchange.
But I thought, oh yeah, okay. So they gave AMC money and AMC gave them shares.
Right.
Okay. Got it.
Or like I said, they might be the party they're giving an AMC debt to buy back and they're getting paid in shares, so now they have to work out of the shares. I think that's probably more likely what it is.
I mean, it's such a big slug of shares. No matter when they sold it, it would suck, honestly. There's no way to buy it.
You'd like to think they try to bleed them in a little bit, not dump them all at once.
Such a gigantic slug, though. I mean, they'd be bleeding forever and we'd all be crying as shareholders.
All right, so here is the plan of distribution. This is also, besides the description of capital stock, the selling stockholders, the other important thing to look at in something like this is the plan of distribution. A lot of people just skip over this and say they're not going to sell them. If it says they can sell them immediately and from time to time, they often, in my experience, are selling them immediately and from time to time. So let's see what we can pick out from here. The selling stockholders may offer and sell common stock from time to time in one or more transactions on the NYSE or in private transactions at prevailing market prices at the time of sale, at varying prices determined at the time of sale, or at negotiated prices.
It still has to be within the context of the market before people freak out and say, "Oh, they're selling them $2 over what the share price is." No, it has to be.
Yeah, I've seen people say, "Oh, in other tickers, that means they're selling them." The shorts, they're not going to give those shares to the shorts for less than $1,000 a share.
What that means is during the course of the day,
guys.
It's just like an at the market the company does. During the course of a day, they'll go out and sell what shares they can, and at the end of the day, they average the price, and that's the price they do it. They don't do it on a 100-share lot, block for block trade. They just do it once a day on an average.
This is all boilerplate here, describing all the different transactions.
I would mention the following.
People are going to love this one. This is here on all of them.
Oh God, yeah, that's going to totally get everybody excited.
Don't fixate on this. It's in every damn filing from any company.
I do want to mention the following. Remember that the 2025s have actually traded up to a 10% yield to maturity and will probably trade up further from here. So there is the possibility that some of the sub-debt holders who are experiencing much lower yield to maturity at this point may not want to continue holding. They could be interesting candidates to buy the equity, depending on who they are. And because, at this point, the whole financial situation changes dramatically, especially if you get rid of the ODN debt.
You had to throw that in at the end. I was like, I kind of like where you're going. And then I was like, there she goes.
I can't help it. You know that's the thing, right? Because right now,
I hope for your point that ends up being 100% true, because I will go on any live thing you have and say May called it. July 22nd, she called it.
I don't think they meaningfully buy it, but it's whatever the covenants are, and then it probably is closer to, because those things are done in 2027. So I don't know that they're allowed to buy. I'm not a British debt guru. So if you are one, please post it in the notes.
I did see a couple, Tony, while you're scrolling, I did see a couple of people earlier just say, "Hey, with all this done, are they going to start issuing a dividend or buying back shares?" And the answer still is the company AMC has to make money, not just even be positive cash flow. They have to have profits. Then they can start talking about dividends or buybacks. They are not going to buy back a single share until they are actually profitable, probably for an entire year would be my guess, not just a quarter.
And also, they can't do it until they buy back the ODN. Okay, guys, that's what
I'm just, as I'm reading this, I'm like, I'm anticipating what videos and as I'm reading through all this, I'm anticipating what videos and tweets are going to go out. They're just going to skip over everything that's good about all of this and focus on these bullets that say, see, they're giving them shares to close out short positions. Again, pretty much boilerplate language in a document like this.
Yeah.
So if you're not used to reading these documents, well, that's going to look like a smoking gun. But this is common language. Well, it's giving these selling stockholders the maximum flexibility to do what they want with the shares. Every now and then you'll see, that they can't use it for that, but that is more of a rarity.
No, but literally the covenant in the ODN debt is they cannot buy back stock and they cannot issue dividends. So I'm not, even though I'm teasing and we're all joking, that is legitimately the whole thing for folks that are still coming up to speed on that side of what's going on, how debt matches equity dilution.
But May, you know what I'm saying? Besides ODN or not, a company won't issue
No, you're
dividends
totally right. Of
if
course.
they're not profitable, not just even cash flow. If they're not profitable, they're not
Yeah.
gonna buy back shares or issue dividends.
This is true as well. 100%.
And it's not a single quarter, it's a little longer stretch than that.
Yeah. Unless it's a baby buyback. Like if it's because the stock goes crazy low and they're just like, fine, let's just buy it back at some ludicrous price. But mostly mostly there's zero reason to do that. You'd rather just go ahead and take the hit on the stock for a little bit and sail through it with better working capital and better balance sheet.
I did not pick up on this on this quick read. I did not pick up on anything that said they're restricted from selling them by any certain date. So my interpretation is going to be that they are allowed to start selling them at any time.
With the counter being that it's not in any of the three of their best interest to dump shares on the market. So
that's true.
Can you expand on that, Sparky? That's a good comment.
Well, but you know, between the three of them, they have 100 and some million shares. There's nothing that helps them trying to dump even a quarter of what they have on the market and have it go down.
They are more incentivized to wait for the price to run up on better box office and get a profit on those shares.
Yes, and it could be. It doesn't mean they won't reduce risk by selling 1 million shares here or there in a large volume day when they can to reduce risk like anybody would, but they're not. You know, if you have 36 million shares and the market's up and you could sell 500,000 or 1 million without denting the market, they likely will probably try to do that. But they're not going to try to sell 10 million and kill the rally. That, you know, if they have 40 million left, that doesn't help them. That goes down 20%. You know, they're riding with you. It doesn't that AA phrase. I'm riding with you. You know, the Mudricks are riding with holders. They really are. They're interested in it going up, not down.
Anya says, should we consider this a catalyst? We talked about this earlier in the live stream, Anya, and when I had you can scroll back to when I had the price chart for AMC up on the screen. We saw it push up to that red supply zone and then come back down. And just my general thought, and I don't know that I'll be correct, is that the market really needs to digest what this document is, how it's all going to play out. And I don't see it as an immediate catalyst. I still think the box office and revenue and positive operating cash flow and positive net income are more of a catalyst than something like this. But getting over this hurdle of getting the debt restructuring done takes out a major blockade. What do you guys think, May?
Yeah, I mean, that is everything to the financial statements. I do also want to come back to Fly High and Enjoy's comment on maybe they're short, because we should probably at least address that, because
is that on your who is it? Fly High?
Fly High and Enjoy. Maybe they are short. Do you see that?
Who is it they're talking about?
Oh, the selling stockholders. Maybe they are short. What do you guys think?
No, they're long. They just showed they're long 30 to 50 million. They're definitely not short.
Yeah, they would have already canceled out. It's a really good question because it is a little confusing for a lot of folks, since the dialogue has been all of the bondholders are massively short. I've said more than once, because of the way the stock trades versus the bonds, that's really freaking dangerous. But they would have already, if they were short anything, it would have already netted out. Now, there is one baby, so small, thing that might not have cleared, and it would have been something that disallowed them from clearing their swaps exposure that way. If there was something weird with the swaps exposure, but even that, low probability, my friends.
Yeah, I think these three entities are long, and they're
agree
riding with whoever else is long, and do they want to, you know, they might be traders, not holders, so eventually I'm sure they want their capital back to do something else with, but it you know, it might be a year or two sale, not a month. You know,
so you're telling me that if someone is long on shares, that it would not make sense to short shares?
Well,
at this point, this demonstrates that all of my trolls are so full of it. Because in fact, of this 31 million shares that these guys got that did not cross with immediately with shorts, stuff that they were short, that proves that the debt holders were not, in fact, shorting the living daylights out of AMC to the tune of 31, 59, and 38 million shares. Just FYI for all my little trolls out there. That's why I enjoyed, ignoring you. Love. Like, as it goes. I got a lot of trolling. You gotta admit, Tony. I got a lot of trolling.
I don't know who gets worse, you or me, but you talk about a lot more stocks, and I liberally block people because most of them,
You're a blocker than I am. I try not
most of them, I'm happy to entertain people that disagree, but most of them can't have an adult conversation that devolves into kindergarten insults quickly, and that's a insta block for me.
Well, I'm a younger account, so I needed the engagement. So I appreciate you, trolls, despite all of that.
All right. Do you guys have any other wrap-up questions? We've been doing this for 2 hours now. We went through the press release, the 8K, and the prospectus. I think we covered all the bases. Again, this is a work in progress. This was kind of a working session. It's a lot for everybody to read through. Even in the 8K, I don't know if you guys saw that, there were 20 documents linked, including the 14th Amendment to the credit agreement. I'll have to go through and read that, see if anything changed. It's a lot to read, guys. It's a lot to digest. It's a lot to dissect. And as we saw from the press release, and as May and Sparky were explaining, we have the menu, but the dishes have not all been laid out on the table yet.
Yeah.
This is not finished. We got an inkling of what's to come. We don't know how this is all going to play out. The AMC has a lot of options, a lot of choices here. Maybe we got the appetizers on the table, May. What do you think?
I mean, all I care about is that damn Odeon debt right now. Because think of it this way, right?
I'm going to send you a damn Odeon t-shirt, May.
Let me tell you, let's just be really, here's my dream scenario, right? Because realize that as soon as that Odeon debt is done and you've got some shore up on the balance sheet, another way that this excess stock to the tune of about 100 million shares, the other way it can be absorbed is a direct placement back to the shareholders in a private, what am I saying? How am I saying it? So they could sell it directly back to the company. Because
you see that once in a while. It doesn't happen real often, but you see that with spinoffs. I know Thermoelectron was one that I was involved with forever that originally had 7 or 8 tracker stocks. They had TL's Thermolays and Thermal Instruments, and they ended up bringing every one of those back in, including the debt, into the company.
Yeah, because if you have the shorts getting a little too crazy because they see 100 million shares and they're like, listen, that's going to weigh on the liquidity, nada. Doesn't matter, because if the Odeon debt is gone, if you get too excited as a short, then just wait for it. If AMC's situation with Odeon clears up and they actually have the cash flow in the back half of the year in 2025, sorry guys, I know I skipped it last time, 2025, then you could see AMC legitimately buying back the 100 million shares, and that would be the end of the shorts at that point.
Well, I would agree that could happen. I'm obviously not a bull. I'm more neutral on the stock than a bull, but I think that's a 2025 story.
I agree with you on that.
They actually
one way on that.
actually look like they might have a profitable year. At that point, then you can start talking about it. I don't think that scares
I'm like a woman scorned. I'm willing to wait till 2000.
No, but I'm saying right now in August of 24, I don't think that's a concern of the short.
May is like me. She's willing to be patient for a long time to be proven right.
Oh, and I think the shorts are the same. I think they're looking at this and going, until they know what portion of dilution might come with this, and nobody knows right now.
I'll give them that. The professional shorts are also willing to be patient for a long time.
Right.
It's going to come down to box office.
Well, if they think there's a chance of another 90 to 128 million shares coming into the float just because it's the best funding opportunity for the company, it's great for the company, but it also puts shares in the float. So that's
That's true.
I want to kind of close on that and start off by talking about Platinum's question. She says, trying to figure out when they can exchange for shares. The document we just read through, I didn't see anything that had restrictions on when. So my gut reaction to that is always that means they can start doing it right away. But what we talked about was there is no incentive for them to start flooding the market with shares, especially ahead of what we all expect to be a good Q3 and good Q4. They'd be more incentivized to hold on to them and sell slowly into upward price momentum.
And I'll use it as an example for that. There was a number of videos by my favorite videography talking about Berkshire Hathaway selling 1.5 billion, I think, of it was Bank America shares or something, and how they must need liquidity. They don't care what happens to the share price. No, they still own 40 billion behind the billion and a half they sold. So they're not doing that to kill the 90% or 95% of the rest they own. I mean, that's just nonsense for people to think of that.
I will say this as well. This is scary for the shorts every time earnings comes up.
Yeah.
Like, as much as this thing bounced around a lot in front of earnings, where you would get these short squeezes for short folks that are afraid of what comes out on the announcement, that's going to amplify. It should technically amplify into the next announcement, and we should get just massive volatility.
Well, look at the, and I call it goofy, but look at the Roaring Kitty thing, which had zero to do with AMC. It was only at $10 for about 5 minutes, but it got to $10. I mean, nobody wants to see that if you're short. I mean,
and that's
a really good earnings surprise. Probably would have the same effect, I would think, at least short.
So
Teja, I'm sorry if I mispronounce your name. In Texas, we call that Teja. If it's Teja, I'm sorry. But wants to know, can you guys think of anything bad that could happen to AMC? I mean, for me, the debt restructuring was the primary reason I'm sitting here in cash. Like, I'm watching the price bounce around. I'm not bearish, but I wanted to know the details of this deal before I plunk my money down for $5 or $5.50 a share or $6, because I've been spoiled over the past quarter or two buying it for $2.60 or $3. So I wanted to see what the details were so I could make an informed decision about what to do next. Now we're starting to get the details, but what else do I think could happen bad? Only that all of the movies that were so, I'm sure May and Sparky will come up with some bad things, but I would be concerned, and this is very low probability, right? Almost impossible, that box office doesn't meet our expectations. That'd be what I'd be watching. Watch the box office.
And I don't think that's a 2024 issue, because obviously it's going up. It really is next year.
I'm not worried about that, but that would be like
high expectations for 25 and 26, obviously. And if something changes that into 25, and that could be 6 months or a year from now, but that's true of any stock. If a year from now revenue goes down and they were profitable and start taking losses again, but you can't look that far forward.
Sparky, you mentioned, we talked about so these guys have shares. Something bad that you could say it's bad is if the price starts pushing up, Mudrick, Pentwater, and Discovery could start unloading some of their shares. Is that bad?
No, it's not. It's not bad at all, because it gets them out of the way. But what it does do is slows down. I'm not talking about a spike because of some squeeze thing, but just generically over time, as this thing creeps up, it could be slowed by, I would think, every one of those shares at some point in the next 2 years is probably for sale. They're not a permanent holder. They're not Vanguard that's holding them because they'll hold them forever. I mean, that's the one thing you have to remember about these guys. They definitely benefit from a higher price, but at the same point, they are determined to exit this play and go do something else more lucrative with the money. I mean, they're not going to hold this for 5 years.
What that tells me as a trader of this stock, and just keeping it real with you guys, if there were some, let's say, new Roaring Kitty momentum and you see AMC start pushing up, you should expect that then these guys are going to start selling. That's going to cap where it goes to, and you need to have some realistic price targets, because you know what's going to happen on social media. $1,000 a share.
Well, but that's you have
You gotta get these shares out of the way first.
right. And that's exactly what I think we were just saying. They are not a foolish seller, but they are a motivated seller. Steps up. These guys are not. They are not emotional. They're very methodical, and they're gonna sell 1,000,000 shares at 6. They're gonna sell 1,500 shares at 7. They're gonna sell 2,000,000 shares at 8. They need over time to get out of this play because they're not the same kind of holder as somebody else. They took a lot of risk getting in this, and they're going to take their money and go home over a period of time, not immediately, but over as the market allows them, they're gonna.
So is that bad news? I mean, for me, it's not. AMC had to do something about the debt. This is like an unavoidable situation. It's just news. I mean, we knew it had to happen. Now you know what it is, and we deal with it from here.
Well, the mechanics are in favor of the MOAS people right now. So the mechanics in general, because you've got like literally the correlation or the relationship between any of the meme stocks is so high right now, which we saw with GameStop shooting up and then AMC falling behind. So literally for the MOAS people and what it would take for these guys to sell out, it still favors it favors upward movement, not downward movement.
Here's what I would suggest, because I just think, and I get trolled back for saying this, I think a MOAS is over. I don't think a MOAS can happen. And it's only because if the stock would all of a sudden go to 20, let's say, for whatever reason, the company is going to sell shares. You have these three guys with a reasonable size chunk, they're going to sell shares. So I just don't think it is disciplined as you like to think these longs are. The shorts are going to be forced to cover if it starts moving, but I don't think unless they get, everybody says, oh, margin called. Well, I don't know that any individual short is as big as what, I saw a comment in here earlier and I held off not saying is there's people say, oh, well, 50 times the float is shorted. No, it's not. If that was true, the FTDs would be, $1 billion. It wouldn't be 30,000. So I just don't think that's true at all. It doesn't mean it can't go up. I think the exponential explosion higher is past us just because of number of shares.
Okay, that's a fair point, but you do have this massive correlation between the meme stocks and the swaps that are attached to it.
No, I'm not saying you couldn't have a nice spike. But kind of what Tony's saying, at some point,
will it be 20?
Like I said, a huge spike to me would be 20 or 25, and you'd have multiple significant people selling, whether it's the company.
Okay, that I'm okay with.
And just like what happened with GME, because Tony and I talked about it, the one thing AMC did unbelievably well on the last spike up is they had a shelf they're ready to go. Remember, GME had to go get everything filed so they could sell shares. They missed the top of their pump because they weren't ready. I don't think AMC is going to make that mistake. If you get a
that's the whole shelf
20, 25 pump, they're going to be in there selling shares because they should. And like I said, you have these three players with, I don't know, what is that? Is it, even 10, 15, 20% that they're motivated to get out of? I just think those shares will go in, not all at once, but step it up. As it runs up, I think it'll slow down. It'll slow down an explosion to the upside. That would be my only thing.
Totally agree with that. But one good MOAS could remove this dynamic and benefit the stock greatly, is really my point.
It could.
Because this is a huge amount of runway that they've gained. And then there was one question earlier. What was it? It was related to...
While you're looking for that, one other piece of potential bad news, and I have not been keeping up with this like I should, is the Teamsters negotiation. So that
is a thing.
I need to read more into that. I'm aware of it, but
But that's again that's not a 2024 issue. But look, we already had the shutdown.
This is a new ongoing negotiation with the writers and actors.
In 26, that could be something completely unexpected. You can't plan for it. You can't see it. Whatever that contract is, if it comes back up.
No, this is something with the deadline at the end of the month, Sparky.
Yeah. No, but I'm just saying. No, I'm saying beyond that. We're looking for what bad could come out.
I'm not worried about 2 years. There is more potential, like the writers and actors strike, renegotiations in
Right.
2026. People are already asking me about that.
Yeah, it's
Yeah,
not a crazy
let's
comment.
get through this year and next year first.
No, but I'm just saying we're looking for what negative could happen, and that's 2 years off, and I don't think anybody should worry about it. But that is
Right.
something out there.
Yeah, but I
Frankie,
don't want to
you
ignore
hear
you.
me, Frankie?
Your point.
Do you
I'm
see
ready to
five?
go to the moon. I love it.
Do you see 550 a share as a steal right now on AMC? I'm looking at the chart. Let's put it back up. And my answer is going to be not a steal.
You had your supply. That's the one you should put up.
Yeah. I mean, so I have 438 and 413 drawn in as demand zones. I don't know that it will get back down there. I can't tell you that it'll come back down there, but that's where I would like to buy in. The other place that I like to buy in is if you get a confirmed breakout through this supply zone. You got your demand zones down here, supply zone up here. If you get a breakout through this, then you can get an extended run up. So, but I mean, you really need a catalyst to get through that. And based on what we saw today, this was not a catalyst to break through the supply zone. So we're just going to have to take it day by day the rest of this week. For me, the real catalyst next would be some really good news from AMC in a quarterly earnings, or a bunch of movies outperforming even those of us that are optimistic. And I've been very quiet about my optimism, but because I don't want to oversell people on what I'm thinking. But I'm pretty optimistic about the box office.
I mean, I think there's a possibility that this thing reacts weirdly. Like the timing of the announcement for the secondary offering of the shares is such that there's a possibility that they were hoping this thing pops on earnings, giving these guys a little bit of a mini exit strategy of some portion of the shares on that. And I just want to be there to support the stock in case something cray happens associated with earnings. Like I think it runs up into earnings, and then who knows what happens after earnings. But I do want to be there to support the stock personally because, you know, my bonds have done more or less what they're going to do.
May, do you want to take Insider Insights question? He's saying nothing's changed. It's just transferring existing pick to another that is backed up by.
Yeah, but it's 6% instead of 10.
I know. I want
good.
you guys. I want you guys to answer this question because it has changed materially.
That's pretty good.
Yeah, it's a lower interest rate and it's termed out, meaning that like the dollar value is over a longer period of time, so the interest payments are in fact lower. And interest expense for the year was ridiculous last year. It was like $500 million. It was like 400 million, something like that, 398 or something like that.
It's around 90 million a quarter.
Yeah, so it was really high. So this is a big change. This isn't a small change.
Don't undersell the drop in the interest rate, guys. Don't undersell yourself.
Yeah, and you remember, like right now, the cash burn on bad quarters, because there is seasonality in this business, the cash burn is between 1 and 200 million. So like if you're literally not paying that in interest expense, then you're necessarily doing a fairly big change to the cash burn. So hopefully that helps you guys think about the numbers, think about the size of the numbers, that sort of thing, because I know that can be really painful and lost within all of these conversations.
Maybe UFO says, is it unreasonable to think that AMC will return to $80 a share? I always answer that question. You got to look at pick a number that you think AMC is going to have for earnings in a year. Let's just say $1. Let's just be really optimistic, and then take a PE ratio of 20 to 25. That would be norm in the industry. That tells you that if they made $1 positive earnings for the year, you could expect a price of $20 to $25.
And that, by the way, is somewhere in the neighborhood of 400 million or 360 to 400 million.
So we'll talk about that as we start getting into some profitable quarters. We got to see what is a profitable quarter returning in terms of earnings per share. The more dilution that happens, that earnings per share drops. So is 80 possible with a MOAS or a super catalyst event?
Sure.
Yeah, that could happen. I don't know. I don't know what gets us over that hump, but just talking like if we push that to the side and look at real financial analysis, I don't know how AMC gets back to 80 a share.
You know what would be a really interesting thing to do if you have a really outstanding 2005 and 2006 and the Odeon debt is gone, is you could actually reverse split the stock
Mhm.
into a like really beautifully aggressive earnings period, which would make it even harder to short the stock.
There's been people talking about that. That might
It's
be one of
actually
his
a good
long-term
strategy.
plans to do that.
I don't know what it costs you from a banking perspective because surely there's filings and some banking things associated with it. But if you were like, you know what, 2005 is looking effing awesome and 2006 is going to follow suit, if you did that to the shorts, they would have such a high cost of borrow at this rate. It would be really painful, I think. I think it wouldn't be fun for them to hold that short.
Well,
Joe says
right now the cost of borrow is about a buck and 1.5%. So that's not happening at the moment.
Yeah.
Good.
No, I mean, right now you wouldn't do it because it wouldn't make any sense, right? Like right now, all of the rigmarole to do it, plus the fact that people think that like that kind of reverse split is necessarily a bearish sign because you don't believe that the stock is going to be able to, stay over $1. This would not be the time to do it. The time to do it would be similar to when GE did it right before they knew they were going to fund themselves like rock stars and then split out all the pieces in a particular way, and they just went straight up on the reverse split. That would be the time to do it. So it would be sometime in 2025 that would crush the shorts and it would actually give you exactly what you're looking for, your $80 stock price.
I want to just address Joe's comment with our general thesis on this channel. And my question back to all of you who are fixated on FTDs and the infinite creation of billions or trillions of shares. Why are you invested in the stock market? If you think there is infinite shares that can be created, then by default, you're saying you can never win. So that's not a talking point on my channel. It's just not.
Yeah, you really just need to fix the company's financials. And
You
then
need
all
to
of that
fix the financials and then the price will respond.
We're really close, guys. We actually are really close. This was a big funding move. This was really thumbs up.
All right, scrolling through questions. People are saying no reverse split because it destroyed the stock before. May, do you want to clarify
Again,
where you were going with that?
GE is the company to look at. GE did a reverse split right into earnings momentum, and it did, in fact, just get the shorts out of it.
And I'm going to also direct you guys to watch my video that I put out a year ago. Does a reverse split, what did I say? I forget what the title was, but I have a video where I gave you guys 20 examples of companies at a market cap similar to AMC that did reverse splits. And I showed you what happened to their stock. And guess what? Some of them went up bigly. But you know what made them go up? They weren't diluting and their fundamentals improved. So look for that video on my channel. It's been about a year. What reverse splits are not evil, guys. It's the combination of reverse split and the dilution. It's really the dilution that is dropping the price. A reverse split is meaningless. And I'm going to keep saying that. And people are going to keep saying I'm incorrect or I'm paid by Adam Aaron. You don't know what the F you're talking about. A reverse split is meaningless to Wall Street.
It
mathematically changes zero.
I would say for the same thing, retail seems to get excited when a stock splits. That usually goes away within a week or two because it's the same thing. All you're doing is moving the decimal place.
Yeah, you haven't changed anything with a split or a reverse split other than emotions. Math has not changed. But
if you have a stock getting under $1, there is a reason to do it, and it has all to do with listing. And they don't have that problem right now. So
that's a separate issue. Yeah. I mean, if you're trying to maintain your listing and you got a reverse split, you're already a shitty company.
But you reduce the type of shareholder that is gaming the stock, because here at the $5 level, a 30-cent move is such a big move in the stock that you get a lot more gamesmanship. So if you reverse split into the momentum of the earnings, you will get a lot less gamesmanship. That's the only reason you would do it. If you knew, given what you were seeing on your projections, that the stock was only going to improve its financial statement, it would reduce the sheer raw gamesmanship because the moves wouldn't even make sense for the type of volatility that it's experiencing. That's what
May, we got another troll here, or maybe Michael Anthony came back under a different name. He wants to know, how much is your Discord, you disgusting grifter?
Oh, I don't have a Discord.
Boom! Thank you.
I don't
Thank
either.
you.
I
Damien,
don't
go
even have a
suck.
YouTube
I
channel.
mean,
Damien,
if you
go
just
kick
love
rocks,
me so
Damien.
much, you can obviously add a super thanks, like knock yourself out. I love super thanks.
She does like trolls in her Twitter
Pay
for
the
engagement,
wine.
so
Thank you
go
guys.
ask her over there,
Super
but she
thanks,
doesn't have a
Michael.
Discord, dipshit.
Buy me a nice glass of wine. That's cool. I'm all into it. Hey, you know what? I'm still a girl.
I do have a Discord. It's about 30 cents a day to keep dipshits like Damien out of there. I call it an inconvenience fee. Let's see, what
Follow
else?
my social down below, guys. Thank you.
Any other good questions? We've had 2 dipshits in 2 hours. That's pretty good ratio. Robert says GameStop still struggling to be profitable despite no debt and a ton of cash. Well, I mean, their core business is suffering, Robert. It's in a decline. So the cash gives GameStop the ability to change that dynamic, and we'll have to see what management does. I cover GameStop once a week with basically this message. There's a lot of misinformation being pushed by GameStop YouTubers, focusing you incorrectly on book value, telling you that when the 10Q drops and people find out the book value of GameStop moved from 6 to 10, that the price is going to skyrocket. That is absolute hogwash, because Wall Street can compute the book value 5 seconds after GameStop does a dilution and raises money. Everyone knows what the book value is. These people are idiots. And book value only really matters if you're looking at a market cap under book value. What we're looking for from GameStop is a return on the cash. We need earnings. We need ROIC, ROA, ROE, things that matter to Wall Street. And when that changes, when Ryan delivers a plan to fundamentally change earnings or return, then you can see analysts start giving you upgraded prices on GameStop. But it is still overvalued by any metric that Wall Street uses. And you got to stop listening to dummies on YouTube.
Goes out and buys some. If he goes out and buys a $400 or $600 million company that's profitable and immediately drops to its bottom line, I think the market would love that. But
yeah, I mean, they have the potential to change the game, but the game is not changed because they still have no earnings. And what is cash worth? Cash is worth cash. So the company is literally worth $10 a share plus whatever premium you want to give them for potential or investor support. What's that worth? Is that worth $20 a share?
I don't usually comment on GameStop, but I really, really wish that Ryan would do a call to help us understand.
I comment on it, May, because there's people that don't know what they're talking about, pushing this false narrative day after day that book value matters. And you guys, May, Sparky, tell me if I'm paddling up the wrong creek here, but book value does not freaking matter. When your book value is 10 and shares are 25 or 30 and you got no earnings.
It only matters in the Roaring Kitty's original 2021 buy.
Exactly.
Where it was, I don't remember what the book
market cap was well under book value. That's the
$6 of that was cash and it was trading at $2. Well, then he made the decision saying, no matter what they do with their existing business, they have $6 in cash, so I'll buy it at $2.
You got people covering GameStop that don't understand finance, don't understand accounting, certainly don't understand company valuations. They've been incorrect on 75% of their quarterly estimates of what was going to happen. I don't know what's going to happen in the next quarter. I'd love to go long GameStop, but you can't do it based on what they're telling you, because you're going to get, if the quarter's bad, you're going to get screwed.
I am not long or short GameStop.
I have no GameStop position, but I've been trading it profitably for 2 years.
Oh, I think it's a great, even now, probably a good volatility play. It goes up.
Absolutely. It's a fantastic volatility play, and that's how I've been trading it.
I still think
do a conference call. Ryan, if you're watching, do a conference call so we can understand what the heck you're trying to do with this company. Then we can all change our opinions.
I think the challenge is, and May, Tony and I have had this discussion, but May, you could chip in, is I don't think there's a magical list of 1 to $4 billion companies he can buy that are profitable, that are undervalued, that he can instantly just go do it. I think that takes some digging and reaching around and finding something maybe that has a couple little dings you think you can fix. I
I don't
don't.
know the answer. The guy is really talented because he's super young, and what he
Oh,
did,
there's
so
He's
it's
the best thing. Ryan Cohen is the best thing GameStop has going for him, I think. I know the Bears hate when we say stuff like that. The Bears hate Ryan Cohen because he's being quiet, but I'm going to give him the benefit of the doubt and I'm going to believe in him, but I don't believe enough to pay $25, $30 a share. I got to see a breakout above the resistance area, or I got to see it drop into a price level that I'm comfortable with. We're close if it keeps coming down.
Yeah, my thing is if I don't understand what you're trying to do, even if I think you're at the world of you, I'm just going to hang out in the sidelines till I better understand what you do. And that might mean that I miss it, and totally more power to
And
you.
that's okay with you.
Yeah. But Ryan is really talented. I just wish he would do a conference call to help a girl out. You know what I'm saying?
no, that's the Warren Buffett thing. If you can't explain it to me with a crayon and a piece of paper, I'm not going to go in it. So that's
Just help a girl out, Ryan, okay? I don't understand what you're trying to do.
Damien says Adam is just buying himself time, hoping the apes will give him more money. Well, they didn't announce any more dilution. They have over, nearly 700 million in the bank. We're heading into what we think, maybe not this quarter, maybe next quarter or in 2025, will be some positive operating cash quarters, potentially positive net income. So I don't know that he needs more cash. If I do, I will let you guys know. As I famously told you all in March, I sold a day before the dilution because I was worried about it. And I've been providing weekly updates on cash burn and dilution risk. So Damien, if you're worried about that, you're in the right spot, buddy, because we try to warn people about that if we see the risk. I don't currently see the risk. If you do, that's fine.
So many haters that I own the bonds. Listen, guys, I feel you. I'm up on my bonds, okay? And quite frankly, I'm actually up on my stock as well because I do sit there and support the stock. So just FYI, I am both a bond and a stockholder. So
Richard says, can AMC be profitable in 2024? Not by my current spreadsheet model. No.
Cash flow is maybe a different story because we don't know.
Yeah, we're talking net income. Can it be profitable by my model based on my current expectations for box office? No.
Yeah, even with all the debt changes, no.
We could have maybe a profitable quarter or positive operating cash flow. Maybe we got to get the box office up there, but I'm not forecasting any of that at this point. It's too early, and definitely not net income profitable.
But if we use that first word, can, what probability would you put on it, Tony? What are you seeing so far?
I can tell you guys, I'm a frequent patron of the movies at AMC. I spend an obscene amount of my entertainment budget on concessions. And really, honestly, that is the most important thing to do if you support the company is go spend your money because revenue matters. Walt says, Damien keeps flapping his mouth. I don't mind people flapping their mouth, Walt. I deal with trolls all day, every day. But as long as he is an adult about it. I mean, people are allowed to have a different opinion. And there's some really dumb opinions out there. His might not be dumb. He just has a more negative perspective, and he's entitled to have that. Deadpool and Wolverine Baby UFO. I have done my forecast for that. I hope that my forecast gets beat. I try and pigeonhole in conservative numbers, so I'm not overdoing it. But I'd love to see my numbers get beat. And there are movies right now that are beating my numbers, and some that are not even meeting the numbers that I have. I track every wide release, so we'll see. We'll see. The rest of this month and next month looks really good. I conservatively have it around 2.4 billion, 2.6 maybe for Q3. I know that seems like a lot. How do we get to 2.4 billion domestic box office when we're only at 700 right now? You got to look at the movies, and you got to have crunched the numbers of what they all are anticipated to do. Now, will I be right that it'll be a 2.4 or 2.6 box office domestic? I don't know. That depends on how those movies perform, how audiences like them. But that's what I have kind of pigeonholed in for my Q3 estimate based on my doing the work. We'll see. There are people saying 3.5. Like, I think that's a little crazy, 3.5 billion Q3. But would I love to see that? Sure. Am I going to go on the record saying that? Absolutely not. Anya says, is there a bot on here deleting Walt? No, I see all Walt's comments.
Yeah, I don't think anybody could delete them except for you as moderator.
Anya can time out people. It's only you and me, Anya, and I haven't blocked anybody. Oh, well, I blocked Michael. I haven't muted anybody tonight.
I don't know. Has Anya been drinking like the rest
There's
of
a lot of Anya, you deserve a drink, girl. It's been a rough road, so I feel
Someone
you.
asked, what is my Deadpool guess? All right, hang on. And I just realized when I was talking to the Discord last night that I missed a whole weekend in my Q3 forecast. I've been so busy today that I haven't even got in and updated the numbers. Like, I'm at 2.4, 2.6 billion, and I missed in my count an entire weekend of Trap and a couple of other movies. What else is coming out that August 16th weekend? So I'm going to get to update my numbers. But Deadpool and Wolverine, you're going to laugh. Some of y'all are going to laugh at me, but I did these numbers 4-6 weeks ago. Domestic, I have it at 350 for the entire run. And it already looks like, the opening weekend is going to do what? 200 million?
Yeah.
So it's probably going to beat my number, which is great.
Nice.
Which is great.
Will this coming quarter, where are they closing out the quarter? Is it June 30th?
Yeah.
Okay, so we'll have really good guidance on how the summer's going whenever they finally report,
well,
right?
That's kind of what I want to see is
yeah.
It still wouldn't shock me if, the box office caught fire, just the last 10 days or 2 weeks of June. So it's going to look better, but it might not be runaway. But if they come and say, hey, we're 20% above, and again, I'm not an AMC owner or bull, but if they come out and say, hey, we're 20% up above what even we projected.
Guys, if we can get from 700 million to 2.4 or 2.6 in 5 or 6 weeks, you're going to see me celebrating. Just that is a tremendous. If we got 3 billion, I was going to say I'll stick a banana up my ass, but
Sandy Shrimp.
I'll pop a bottle of champagne with you.
These folks on the debt side, you guys have to understand that it's not one specific group that is safe from bankruptcy. All of AMC right now is safe from bankruptcy. That it's like this division between the debt holders and the equity holders is completely created thing coming from the shorts. Okay, the whole separation of debt and equity holders comes from the short sellers. It does not come from the debt holders. It certainly doesn't come from true equity holders. Okay, the debt holders have they're accepting a 6 to 8% dividend yield. So I don't know what it takes for people to understand that if they're accepting a 6 to 8% dividend yield on debt that they could easily force at a much higher rate, the debt holders are not your enemy. The short sellers are your enemy, and they keep putting out nonsense. Okay,
I'm still as a debt guy. I'm stunned by that. I can't wait to see what the final numbers look like, because that's a stunning cost to borrow.
Crazy. Right, the risk-free rate of return is 5%. The spread for triple C negative right now is 10%. You should be actually expecting a PIK toggle of 12 to 15% if you had even average debt.
And that would be good. That's what I was personally looking. I was hopeful. I thought if they could roll into another 10%, but was longer, I thought that would be a great deal for them to go from 26 to 30 and keep 10% rate. I thought that'd be great. I never even conceive of them shaving a couple hundred
6
basis
to 10.
points on it.
The debt holders are not your enemy. The short sellers putting out nonsense, separating you from understanding what's happening in the debt markets, those people are your enemy. Stop following them. Okay, I'm done. Thank you.
Someone asked, what was my estimate for long legs? I had long legs. I didn't think it was going to be as popular as it was. I had it at 15. It's currently at 45 million, a big beat. But I had Fly Me to the Moon with Scarlett Johansson and Channing Tatum, Woody Harrelson at 50 million for its run, and it's only at 16. So you see how, I mean, we do our best guess, and some exceed and some fall flat. But man, if we start the next 5 weeks, all of these movies beating my estimates, it's going to be off the hook, y'all. We got some big movies over the next 5 or 6 weeks. I have conservative numbers. If I start seeing them coming in as beat, you're going to see some pumpy sounding videos from me. But that's not me pumping anything other than just celebrating that the box office is exceeding expectations. I have very realistic expectations. And if they are exceeding that, I'm going to take the opportunity to brag about that for the industry.
You know what's crazy is in these numbers, there still isn't any of the artists. Like, we do have that new person that was hired to push music through. None of the numbers incorporate another Taylor Swift, by the way. If we get a couple of those through this summer, heck, I mean, so excited.
I had Twister based on early estimates 4, 6, 8 weeks ago, plus the previous franchise performance. I had it for its entire run at 100 million. Guys, it did 80 million in its first 3 days. This is another huge beat coming with Twister. I hope it holds up into Deadpool this coming weekend. I hope the numbers don't trail off. I hope people support both and go watch Twisters in Dolby or IMAX. It's a fantastic, fun film.
I will say, anybody on the West Coast like I am, especially the Northwest, it's been 100 degrees now for like 15 or 16 days in a row. We're supposed to get another 8 days. We're going to go see some movies because it's the only place that's cool anywhere out here. It is horrible.
I sit here at my desk in the AC all day, and when I took my wife the other day to go see Twisters and we were walking from the car to the theater, I was like, damn, it's hot out here. Can we hurry up and get in the building? I'm about to pass out.
It's kind of crazy. Global warming is helping AMC, strangely enough.
Well, this is just normal. This is just normal Central Western stuff to have 3 weeks in a row where it's 100. That happens every year.
I don't know who Damien's talking to, but he says, do you understand what high frequency trading is? I think all of us on the screen do.
Yeah.
I talk about it all the time. Kersey says, I had the 100 million for the entire run of Twisters. That was my early forecast many weeks ago, and we're clearly going to blow that out of the water. So fantastic.
Would you say it's like a tornado?
Oh.
No, sorry. I had to. I'm sorry. Okay. Look, it was there. It was right there. What do you want from me?
Damien says 90% of trading on AMC is not real. Well, I mean, high frequency trading does happen a lot on AMC. That's why I try and explain to people how can the float trade so much on certain days because of high frequency trading. Absolutely. Volatile stocks are like magnets to high frequency trading
that's what
firms.
They want to make those pennies and nickels.
Absolutely. I mean, we talk about this all the time. I wish more people would wake up to it. That is, though, real trading. Whether you like it or not, that's real trading. Welcome to Wall Street.
I will say the joyful thing about high frequency trading, if it works in our favor, is we do have 100 million shares that need to disappear. So
and those guys are agnostic to price direction, which means they don't care if it goes up or down. They're going to be in there. Yeah. So really what we need is some catalyst, some news, some momentum to get it moving, and they'll pile into the upside until it makes sense to pile into the downside.
Dream.
That's what I was going to say is you can't, everybody that rips on them and says, oh, they're killing the stock. No, if their momentum, if this thing starts going up,
they're not trying to push the price down. They're just going to push it whatever way it's happened to goes that day. That's it. really that simple.
I like that people have turned my Odeon love into a drinking game. I'm
I-
totally okay.
Oh, May, I keep on missing Robert's comment. He wants to know what is the freaking wine that you're drinking.
Oh, this is, I can't remember. I think it's just some kind of Bordeaux or something. I got a good deal on it. You know, I'm a value
Buy
buyer.
American, May. That'd be my recommendation.
No, the
Buy
euro
American.
is so weak right now. Actually, occasionally you get really good prices on European wine because the euros. Listen, I'm a value girl. Okay, I do my work.
I buy American or Italian wines. No
I'll
French
do
for me.
American wines, but Napa Valley is smart enough to price their wine very, very aggressively. If Napa Valley was dumber, I would buy their wine, but they're not. The French, however, occasionally price.
Damien says your viewers don't understand the basics of trading. I think you underestimate my viewers, Damien. You're on the wrong channel. Go bother some of the channels where they don't talk about how to trade, where they don't talk about educating people on reading financial statements. You're really on the wrong channel.
And
my viewers understand far more than you think.
And for those playing the Odeon drinking game, Odeon.
I didn't know there was an Odeon drinking game. I would have had more. I would have had more than one beer at the ready, May.
Sorry, it just started showing up on the comments feed on my side. I'm there for you guys.
I saw one other
Sunday,
comment.
but you know, take it a little bit easy. Small sips.
Oh, Alan says, what do we think about Noisy Corex saying that AMC is covering their butts by opening a shell company? I saw his tweet.
Yeah.
I haven't talked to him. I don't agree with his tweet. He's not the only one putting out that message. I have heard that certain AMC YouTubers are putting out a similar message. AMC's creating a shell company to bankrupt the company and hide all the assets from lenders. I think it's way too early for people to be making some judgments like that.
Plus, we'll have to see.
It doesn't make sense to me.
I don't think, forget that it doesn't make sense. I don't think that's going to end up being that large an entity. We'll have to see what goes in it, but I don't think so.
It was 175 theaters out of 900. Yes, it was the IP also, but I need to see the actual details of the deal. And if those documents exist, I haven't had a chance to read them yet.
I think it's what we were talking about earlier, Sparky. And
we also need to hear from the company. Like, what was the idea here, right, May?
We'll just see what they say. I think it's accounting or tax.
I'm going to say, who's ever saying that bullshit, shut your damn mouth until we learn a little bit more. Maybe you're right. Maybe you are.
Watch the earlier part of this video for sure. I think it's a higher probability. That's what we were talking about, and a very low probability.
It's a higher probability management has some plan that is beneficial to the company's success and survival. I'm not one of those glass half full people that is. I mean, those people have been wrong every step of the way on their interpretation of filings, and I'm not going to back down now and say that this is it. AMC finally capitulated to get ready for that bankruptcy. We're on the verge of success here with the box office, so it doesn't make sense. Doesn't make sense.
We've been at this a while for a Monday, but I'm really excited, obviously, because this is a really great situation for the stock.
Let's end with a Hycroft comment. At what point in time does Adam Aaron sell shares in Hycroft?
It's after he puts the leases and the IP in Hycroft. I already thought I covered this. I'm sorry.
AMC's underwater in Hycroft due to the reverse split and the fact that the company's not mining. They have no income. I cover Hycroft once a quarter. Talk you're not going to hear anywhere else from someone that doesn't hate Adam Aaron or Diane Garrett, but I listen to what they're telling us the plan is. It's a 7-year plan.
Oh.
The company, Hycroft, has said that we will get a feasibility study published in 2025 now as to whether or not they can resume mining.
So little tied up in that it just doesn't matter.
Yeah, I mean, it's a small money for AMC. I'm sorry if you bought Hycroft. I own none because I have been telling you guys for 3 years that they're not mining, and why would you own it yet?
Yeah, it's a little early stage.
But maybe I traded it a few times, but I don't own any.
I don't know. If it goes to, what do they have in it? 25 million or something? If it goes
25
to
million,
zero,
that's it.
something like that.
if it goes to zero, it just doesn't.
It's an afterthought. It's like, I don't even understand why people are so wrapped around the axle over Hycroft. It's a freaking 7-year plan. You won't know. You can be bearish or bullish. I don't care. None of you are right until you find out if they get back into mining and what's the return on capital once they start mining. And until you see that feasibility study, all of y'all are guessing. So why don't you just be a little more patient? And look, if Hycroft says in a year when they publish that plan, we don't have an economic way to become viable, then all the bears are right. And if they say we're going to need to invest in a milling plant and it's going to take 2 years of construction, but here's our path forward, then the bears were wrong and the bulls were right. And we'll have to see. The numbers will be in that feasibility study, what you can expect. And if they're positive, then the price will move based on that. That's all I can say. Way too early for anybody, bear or bull, to be talking about Hycroft.
Yeah, they just have so little tied up in it. It just doesn't.
Yeah.
Once a quarter, I publish an update. It's very fact-based, backed up by the company's documentation in their own words. Go watch a video. Go watch one of my videos.
Yeah.
And stop listening to social media on Hycroft because none of them know what they're talking about.
AMC is a good way to own Hycroft versus owning Hycroft as a pure play. And if anything actually comes out of the ground, it'll be so exciting. And probably Tony will be the first to know since he's monitoring it along with a few others.
I mean, I keep up with it. I keep up with it every day, but I only report on it once a quarter because there's literally nothing to report on.
Yeah. I mean, that's how that business is on mining. It's just a very long wait to figure out if actually there's any gold in the ground.
There is gold and silver. The only question is, can they economically recover it?
Yeah.
And we'll know that now. They're most recently in the past month, they told us the plan that was expected in 2024 got pushed to 2025. I don't have a date. The feasibility study. That's what we're waiting on.
But even then, the price of gold, there's no, like right now, the price of gold doesn't have anything that's stopping it from, like, I mean, I guess there's gold traders that'll tell you that, but in general, the trend is still up because of a number of major dynamics that are benefiting gold. So, you know,
I just want to be clear. I'm not anti-Hycroft. I'm just saying it's too early to have an opinion.
I'd rather own it through AMC versus directly. I would say that.
I'd love to see it do well and contribute to AMC's bottom line, but we're not there yet. So
yeah, it's a flyer. It's like a private equity deal that won't come to fruition for a while.
For all of y'all leaving negative comments, what's the basis? You're speculating that Hycroft will go bankrupt. You don't know. You don't know.
It's rare that something that has both.
It might, but we don't know.
It's a weird thing in 2024, given the demand for those types of raw materials, that you wouldn't just get an offer to buy those wherever they've progressed to. It might not be the most attractive offer, but given that they've already made this progress, there is, like, you know that there's gold and silver. It's just about whether you can extract it out correctly. And you've got this like upswing dynamic in gold. It would be awkward for it to just fully go bankrupt with no buyers.
Anya says, how can they afford the milling plant? Yeah, it's going to be a very expensive milling plant. I expect that they're going to need to build, which is another reason I'm not owning the stock right now, Anya, because you're exactly right. Where is that money going to come from? They don't have the cash to build a milling plant.
They could also just, if the price of gold moves a certain way, like these mining companies are a total pain in the behind, because if the price of gold moves, it changes everything.
They could sell the company to a bigger operator.
Yeah.
They could do an equity raise. They could get debt.
You won't know until it's closer.
We're way too far away to guess on that. But since there's so many unknowns, that's just not a stock I care to speculate in right now. There's plenty of other better plays.
Yeah. I mean, it would be ridiculous to think that there's zero book value, meaning like there's no residual value to the sell off of the assets. By definition, if there's gold in the ground, that land is worth something. It's just how much is it worth? And that's going to be 100% until they get past this point in time. It's going to be 100% related to what the price of gold is, because the price of gold is going to dictate which method you could use to pull it out of the ground. So
they're doing a lot of good work with exploring and core samples to try and develop the most profitable extraction and processing plan they can. And y'all are just going to have to be patient for a year and wait for that feasibility study to come out. And then we'll all know if it was a boondoggle or a gold mine. All right. May and Sparky, I don't know if you want to give your socials, but May, you like to have engagement, so
I do. Thank you guys for commenting on my post.
tell them where to find you, May.
I'm on Twitter and Instagram, but really I'm on Twitter and YouTube at Markets with May. That's where you can find me. I'm still trying to grow my engagement, so I appreciate you guys coming and hanging out on my Twitters and YouTubes.
Give May a follow on Twitter and YouTube. Go watch my video that I put out. This is my little pitch. I put out a video right before this live stream. I don't know if May you knew this, but I announced today that I'm gonna sit for the Series 65.
Oh, good for you!
It's just for fun. Yeah. It's just for fun. I took the SIE a year ago.
We'll pass it. You'll be fine.
And I passed that. I studied for a week. I'm going to give myself a little more time, but in that video that I just dropped, I talk about why I'm taking the Series 65 and a little bit more background about me. Like, why am I here?
You'll do fine.
Why am I here on YouTube? What have I done with my life? How dare I talk about stocks? You have no credentials, Denaro.
It's a very existential question. I asked.
I guess a college degree and a college degree in the industry and 30 years of trading experience don't count for nothing in most people's books these days, unless you have a bunch of letters. But then I see people like you guys with letters behind your name that get more shit than I do. So what's the point of having letters behind your name when you're dealing with irrational, emotional people?
I will. To follow up, I will say I have no social media presence. I'm not a YouTuber. I'm not a content person. I'm just a bond analyst. Been doing it for 30 plus years. Became friends with Tony. If you want to make comments on anything I say, look in May's or Tony's comments, because that's usually where I lurk. I have toned down.
You'll have to find him in the comments of my videos.
Comments, Sparky. You're welcome to comment on anything.
I have toned down my criticism of other YouTubers because it's the good thing to do. So I occasionally will say something when somebody says something so egregious that I just am like, would you please look at what you said? Then I'll occasionally do that. And you're open to comment. I won't even mention the couple that I look at. But yeah, I appreciate Tony and May let me coming on here and speaking my piece. I'm glad I'm able to add something to it from a bond perspective. But yeah, I've had people ask me if I can open a YouTube channel. The answer is no. It looks like a lot too much work. I do have a Series 7, a 24, a 63, and a 65, just in case anybody cares. I have passed and maintained those 4 designations, so that's about what I bring to it. So,
well, follow me along on my journey over the next couple of weeks on the Series 65. I'm going to drop.
You and I talked about it. You have exactly what you need to pass it. You've got the right plan. You'll be fine.
I agree. You should pass it. It's just one gigantic cram, and then you don't want too high a score because otherwise you overstudy.
They even tell you this. I don't know if they even tell you when I took the 65. It was interesting because when I left my previous place, I took I didn't have a 63 or 65 at the broker I worked for because I didn't need one. I took both of those after just because I wasn't quite sure what I was going to do, if I was going to go into asset management or something. I don't need it where I am now, but yeah, I just took I got the class book and I literally went through the information pretty diligently once over a couple of days, and then I just took practice tests. I never
practice tests are key.
I never looked at the information again after that. I really didn't. So
yeah, practice.
It is a lot of minutia. I mean, there's a lot of common sense stuff we use every day, but it's the minutia of the laws and the
and the how many days for this, and that's where you just when you go through the big thing is when you go through the test, you have to look at how you have to read the question and stop and see if did they throw a negative in there, is there a double negative? It's kind of tricky how they do it, but if you stop and read the question, you'll be fine.
What is a Series 65? Watch the videos.
Yep.
Watch the videos, and I will explain everything to you. All right, guys, love you. Thank you for your time tonight. As we work through this, and if more pressing details and explanations come out where we have something more meaningful to say, then, or if I see the bullshit out there from the Bears getting really wacky, which I'm sure it will, I might be tempted to make another video, but I'm going to, keep reading into this and waiting for the company to update us by reading. I mean, going through whatever else I didn't read through tonight, and don't expect a daily update from me on this. We gotta let it play out, but mostly bullish about this. Is there a risk of dilution? Yeah. Go back and watch the video if you're joining in, but this is a great hurdle for AMC to have out of the way end of the day.
Yeah.
I've never wanted Odeon to call bonds as much as I do right now, just for me.
Thank you. Odeon, drink, guys.
Drink. Y'all got to warn me next time to prepare for the Odeon drinking game. All right, May and Sparky, I appreciate both of you. Thanks for your time.
Night, guys. Bye.
Let's go. Yeah. I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back.